record. Okay, I think I started recording. But anybody wants to record from their side, please do so. If you need a permission, let me know. I will give you the permission to record from your side too. Okay. Do you need anybody wants to share from their side? They can say record from their side. They can share it. Record it. Okay.
Okay, thanks.
Okay. Yeah. If you need a permission, let me know and how to give the permission. But I started recording on myself from my side. So.
Jigar, can you give me permission?
Permission. Let me see if
Yeah,
it's
the same here.
Jigar, if you are recording, then can you send it to us later rather
yeah,
than we
I
record
can
everybody?
do that one too. But
Okay,
like,
good.
okay. How to get that permission? Do you know anybody like how to get the permissions for recording? Anybody?
I mean, your verbal consent is enough, I think,
Yeah.
if we are recording, right? So
yeah, like if you want to, record it.
No, but if I click on record, it says that please ask host to give the permission. So
Okay.
I was saying that, maybe one backup is good.
Yeah,
just in case something happens.
just in case. Yeah, that's what. Yeah.
Yeah, you can share it with everybody later on rather than everybody recording themselves. Yeah.
Okay. I did started recording and let me see. Okay. This one is kind of permission where they start video. Okay. Okay. That's fine. If not, then I'll just start a recording and I'll share it. If not, then okay. So welcome guys. Thanks for joining. You are serious enough to know about the training. Okay. So please make sure minimize the voice from your side so nobody get disturbed, and it makes it easier for other people's too. So if you need any question, just please unmute yourself and ask the question. Otherwise you're just gonna go pretty slowly and steady. If you have any questions, please do ask. Okay, so now I'm just gonna go through the topic and makes it easier. So anybody knows, I think everybody knows what is support and resistance. Like in that one, if you see what is support, let me just say, open up the chart for the Twitter. I'm just opening Twitter here. Anybody is using TradingView or no?
No, I'm not using.
Okay. No. So if not, please try to use it.
Okay.
It's a free software. You can use up to 3 indicators, and they are pretty good screeners too. If you need to, you can do some good screening if you want, like for the stocks. So now can you see the Twitter from your side?
Yeah.
Okay. Okay, I'm just gonna remove this RSI. We don't need it. Okay. So this is the TradingView software which I use it. I'm using the free version, and I can use up to 3 indicators over here. So now, in a simple word, when we say about the support and resistance, is nothing but when the buyers are there and when the sellers are present. So if there is a buyers on particular point, it will be your support. But if you have seller, it becomes your resistance. So for an example, to go slow, like very easily, I'm gonna draw here. If you see this area, I'm just gonna make it larger for you so you can see properly. So if you see this area without even like doing much, can you see this area?
Yes.
Okay, so I am on a weekly chart. Okay, whenever you want to see the chart, try to go with the monthly, weekly, and daily time frame. Go from the higher time frame to the lower time frame, because the price always follow the higher time frame rather than the smaller time frame. You need to remember this one. This is the weekly support, right? If I go monthly, look at this one. Does it taking that support? Like here, if you see, it has taken support here, here, and here too. They did not close it on a monthly side. If you go on the weekly, it did close it below that support line. I'm just going to remove this part. So if you see here, this side, it did not, it did respected the support which was on the monthly side. Everybody getting that one, what I'm trying to say?
No, can you explain that again?
Okay, so first of all, let me just see what is, how you see the time, how do you see, how you read the chart. Forget about the support and resistance. Let me just go for the basic, how you read the chart. If you want to read the chart, you need to go from the higher time frame to the lower time frame. Okay, so in this, like a Twitter, this is a monthly chart. So whatever the candle you are seeing, like say for an example, this one, this candle is for the whole month.
Yeah.
Right, which is for the March, and this is for the February, this is for the January, this is for December, October. Okay, so this is monthly chart. I'm going, then from that you can go to the lower time frame. What does it help, like going through this monthly chart, monthly time frame? You can see the trend. So if you see the
Long-term
trend
trend.
is always up,
Okay.
right? So that's how you find out whether you want to go short or whether you want to go long. Okay, there are ways we can find out where you can get into the stocks or where should you avoid the stock. This will help you if you want to go really long for at least say 2-3 years or 4 years or 5 years timeline. Because here, if you see, the trend is up always. It did like fall and then up and then fall and again went up. In this one, for monthly chart, it always took the support at particular area. And if let me draw, if I can get the moving average. Let me see, this is the moving average. So which one I have? This is, let me just gonna make it easier on that one. I'm gonna remove EMA 200 and MA 200 is on MFI. Okay. It's not showing here. That's fine. 1, 2, 3. So those are the different EMA which I use, which I'm going to talk later. So this is which one I have. 4. Number 4 is 50. Okay. So this is the average for the 50 month since it started. The Twitter trend started to trending, right? And then if I go to the medium, okay. So this
What is EMA?
Is exponential moving average, and the MA is a moving average. I will cover those one, but what I'm just saying, like if you see here, I'm just gonna get rid of those one. Okay. So if you see here, do you think like there are some lines? What this black line is for the 200 EMA. Okay, this is 200 EMA. Do you see this taking support on that side, like kind of price is reacting? We will go through later the EMA, but I'm just showing how you can read the chart properly. Okay, so here, if you see here, it's taking some support, right? On the upper side too, if you see,
Support is the but it's touching the bottom of the candle.
Yeah, the support is like have the reactions at particular point. So if you see here, like I'm gonna widen up a little bit. So This is 200 EMA. The black one, which you are seeing, is 200 EMA, right? And that's on the weekly side. Once you go monthly, daily time frame and the 4-hour time frame, we will dig it out more. So at least it's reacting on this side. So if you want to go long any time, when the price comes nearly to this 200 EMA, you can go long. Everybody get that point? Or like I'm kind of going like way ahead?
No, I don't think
Okay.
we got it.
Okay.
So what are you saying is if price comes close to the 200
Yeah.
200
So
EMA,
can I
then
just
you
make
can
a
buy.
request to everybody? Can you just unmute everybody, unmute and ask the question so I can understand, like, I'm able to express myself nicely. If not, then I can, because this is most important things you need to know when you are like looking at the chart. This is very basic, but you need to know this one.
And again, this is for the long-term investment, not
Yeah.
for the short-term, right?
Yes. This is for the long term, but you need to know that if the trend is uptrend, you don't want to buy the put or you don't want to go short on that particular stock.
Okay, it's not for the day trading, but it's for
It's for the day
Okay.
trading too. I'm gonna tell you about how the day trading works, but this is for the long term as well as the like swing trade as well as the day trading too.
Okay, Jigar, one very basic question.
Yeah.
How did you get this candle? Because I tried opening
Okay.
TradingView on
So
Twitter.
if you go on this side, like if you come here on your left on the top, you will see the candle. Here, if you see bars, candle, hello, Heckinside line.
I have one small question.
Yeah.
So are you recording? You gonna be share this recording
Yes.
with us?
Yes.
Yeah, because I'm outside. I'm just connecting through my phone.
Yeah.
I'm out.
No problem. I am started recording, and I will do it.
Okay.
And even if after this group is finished, and if you have some questions,
No problem. Yeah.
Okay.
Thank you.
So did you get the candles?
No, I still do not.
So go to the line. If you see the FX on your top and go to the like bar style.
Oh, I see. Yeah, got it. Okay.
And then put like star it for the candle.
Yeah, it says doji star,
No.
bearish, doji star.
Did you look for the like particular stock?
I'm not getting that toolbar that you have, Jigar.
Okay, this here. If you are looking at my screen,
Yeah.
here, if you go like a timer, and there is a line.
Yeah, I'm looking at your screen, but I do not get that toolbar on my screen for some reason. I don't know.
Okay. After this group, like let's go through the. I'll talk to you in a private, and then we'll go through the. We'll
Sure.
set up a trading view. Okay.
Sure, no problem.
Okay. So now, if you see here, this is like a more of a monthly chart, weekly chart. The price reacts to the EMA. EMA is a moving average. Is always react to during that time. Let's go to the day trading, like for the day timing. See here, this one I'm gonna get rid of those push. Look at this one. This is perfect opportunities for anybody who wants to go for a longer in Twitter, which was around $33 because price reacted here. It was on 14th of July. Because this is called a kind of crossover from the different EMA or the moving average. When you see those kind of crossover, always go long or the short, depending on whether the price is moving down or the up. From here, if you see, I'm gonna go backward on little back on the other side. If you see here, this reaction, this is 200 EMA and those are like smaller time frame. Look at this one. Once it crosses other, it will fall. It try to react and go move on. It has to move this EMA in order to go further, in order to go long. If for the question you are having, like for the day trading, whenever you see this kind of crossover, you try to go short, don't go long until it crosses to the 200 EMA. Does it make sense or no? Or I'm kind of making you more confused. Okay.
So those three lines are what? They are different.
Those are the EMAs. So those are like different kind of EMA. The blue one which you are seeing is 100 EMA.
Okay.
The purple is 50 and the black is 200. I will say
what is 100 and 50 and what are those?
Okay, so now let me see. Let me write down the here. So there are two things. One is EMA and other is MA. Okay.
Mm-hmm.
This is exponential. Yeah,
Yeah, got that.
Okay, exponential. Let me just see. And this is the simple. This is the simple moving average. This is moving average. So in this one, when I say 50, so it goes to the last 15 days. So from 1 to the last 15 days, like today will be the first day and it will go back to the last 15 days. If I say 50, it goes back to the 50 candles. So for an example here, if this is the first day I'm taking, you go back to the 50 candles. So for an example, the 50 candle is here, right? Just for an example, this is 50 candle. It takes the average of the price, and that's how this line is plotted.
Oh, so it's 50-day average.
It's a 50 candle average. It's not
candle.
a 50
And each candle is a day or a month?
So this one is a daily candle. So now if you see here, I'm just gonna make you say this one. Do you see there was a line here, which was $67, right?
Yes.
Now I'm going to the 4 hours. If you see that line moves to the 68. If I'm go to the smaller time frame, the price is 67.08. If I goes 15, is coming to the 66.18. Did you see it changes its prices?
Yes.
Why? Because it's for the when I say 15 minutes, so it will count last 50, like 50.
Candles 15 minutes.
Yeah. So like 50 times 15 minutes candle.
Okay.
Okay. But if I say like this is a weekly, that means it will count 50 weeks.
50 weeks.
Yeah. So now if you see here, the price is $51. The same price, like same line
So
is it changes.
Candle is based on the frequency we are selecting.
Yes. The amount which it count the price is always depending on your time frame.
Okay.
Okay. That's why when we see the longer time frame, it gives a better idea what is the trend, because some of the moving average will be just good for the last 3-4 days because it has increased so much. But when you see the real picture, you will see from the longer time frame. So I'm pretty much sure everybody knows what's the time frame, or is like I need to explain that one too. If you don't know, then I can explain pretty quick on those one. Everybody knows what is time frame?
Yeah, Jigar, what is the longest time frame that you can select? Is it a year, month, or
monthly? Is the like based? They usually people check from the month, then week, and then day, and the 4 hour, 1 hour, 15 minutes, 30 minutes, and 5 minutes. So if you see here, these are the timeline.
got it.
Yeah, go ahead.
Does the candle change if you?
Yes. So
monthly, then it's
yeah. So if you see this one
accumulation
here,
of the whole month, right?
Yeah, this one candle is for the whole month.
Yes.
Whereas if I see weekly,
then week. Okay.
This is for the week. And how does the candle form? Let me just making it easier for you to see how does the candle form. This is for a 1 minute. Like, okay, let me just take this off. So, okay, I don't need it. Done. Okay. So now I selected 1 minute candle, right? Whatever the candle you are seeing is for the 1 minute. Okay.
Mhm.
So now I'm gonna say, if I want to make the 5 minutes candle, so this is 1, 2, 3, 4, and 5.
Mhm.
So this high and this one, this is your 5-minute candle. I'm not counting this one, which has a wick, because it's number 6. So
Yes.
if you see your candle for the 5-minute, it will be like this much. This area is your for the 5-minute candle. Say, let me just go by the like 5 minutes and you will see how does it look specifically for the 5 minutes. Let me see. This is for 15. So the timeline which I'm gonna select is like from 15 minutes, which is here. And 1, 2, 3, 4, and 5. So this is the lowest of that candle for the right 5 minutes. This is okay. This is first one, and this is the lowest of that candle, which is here. So if I go with the 5-minute candle, let me mark it so I know which one we are checking. This is for the 5-minute. So did you see? That's where we plant. I'm just gonna remove this one now so you can see. This is how we plant, right? For the 5-minute candle, this is the low and high of the candle. That's how the 5. So one, if you want to go for the 5-minute candle, it will take last 5 minutes candle and merge together. If you go for the 15 minutes candle, it will take last 5 minutes candle and merge it together. That's how the time, like the candles are formed.
So it's like considering high and low, right?
Yes. So it will take the high of that candle. It will take the lowest of that candle. It will take the opening and the closing of the candle. So whatever the price was opening for the first candle and what was the closing for the last candle. That's how it takes that's how it forms the candle. So,
Hey, Jigar,
yeah.
so there are whiskers as well, right? There are whiskers to the candles.
So okay, let me go very basic, very basic. So this is candle. Everybody knows green is a blue and this is red is a bear. Okay. So this is your opening for the green candle. This is the closing of the candle. This was the high of the candle, and the closing, like opening and the low is the same.
Mhm.
Okay, like let me show you here. This is very basic. So if everybody knows, please, sorry, pardon me, but this is very basic. If people don't know, this is for that people, right? So if you see here, I'm gonna shoot. Okay. So this one is the low of the candle. This is the like opening of the candle. This is the closing of the candle, and this is the high of the candle. Okay. So now what you can understand from this candle, like this candle, specifically this one, this candle I'm talking. So price open here, it have fall down here, and the bulls push the price higher, and it gave the closing here. Does it make sense? How does the candle form?
Can you explain again?
Okay, so for example, let me put on text. Okay, so when I say the candle has two things, like a high, low, close, and open. These are the 4 characteristics of most of the candle.
Right.
Why I said the most of the candle? Because some candle has the low and the close is the same, right? So that's why this is the characteristic. Now, if I say what does this candle is all about, it says the price open here, then it fell here. Okay, from there price went up, and then sellers were there and they pushed the price up to here. So now the price is like this, because this was like low of the candle, this was the open of the candle, this was the high of the candle, and this is the closing of the candle. This is for the green candle. Okay. Red candle is a little bit different. Okay.
So Jigar, just to confirm,
Yeah.
when you're looking at a bear
Or the seller. Yeah.
bullish candle, you are looking at closing on the upper side.
So if the candle is green, say if the candle is green, this is the opening and this
Yeah.
is the closing.
Closing, correct.
So it is a bullish candle, white
This is
candle,
like
right?
whenever you see the white or the green candle, opening will be lower and the closing will be the higher. That's why it's green. Okay. But if you see the red candle, this one, opening is here. Opening is on the top. And this is the closing. Closing in the bottom. If you, for an example, now let me show you here. So this one, if you go this candle, this is the opening, this is the closing, and this is the low of the candle.
Okay, so in the stipulated time, if the price has rise is more than where it opened, then that is a green candle, and that's why you see the closing on the top. And
Yeah, close. Yeah, that's why. Because
and
there are
opposite.
buyers. So it shows the buyers. People bought from this side and they went up to the 66, but the sellers were here. And then they managed to close the price here. Okay. Does it make sense?
Yep.
Okay. This is very basic for the candles. Very basic. Okay. Now, if you see this candle, I'm just gonna, because we started the candle, that's why I'm gonna show you a little bit here. If you see this portion, and I will show you the resistance here. So now in this rectangle, like here, if you see here, this candle, the first one, can you see that price was very, okay, I think I kind of covered the portion which I didn't want to do. So I'm just talking about this rectangle. Okay. So now here, if you see price open here, so I'm just gonna say price open here, it went up and then it closed below.
Yes.
What does it show? When you see this one, whenever you see this like big, this is called wick or the shadow. Okay. Everybody knows this is wick or shadow?
Yes.
Okay. Yeah. So if not, then it's very basic then. Okay. Now, if you see, if I show here, now this will be your resistance zone. And I will say why. Because if you see here, the price tried to go up. If you see here, the price from here, okay, let me show this one. This is perfect, your support and resistance zone. And why this one came here, I'm going to show you when you go to the chart. This one, look at this one. This is perfect resistance zone. And this is perfect resistance zone. I'm just going to draw it and I'm going to explain you the particular for the day trading. Okay. Now, so everybody sees that triangle rectangular I just draw, and I'll show you how you can draw it too. Okay. I'm just going to expand it. Now, if you see this particular, this area of interest, it has a big wick. Okay. Whenever you see big wick, like this big, and this is the candle and the candle. So what does it shows is here on, let me just change the color of this if I can. Okay. This area has a seller. Okay. Does it make sense to you or no? Price open here. It went all the way to this point and the sellers put it down and they managed to close it here.
Right.
Right? That means there are some sellers here. These portions is the seller. Okay. Exactly the same thing happened on this area. Right? Because price went up, but seller push it down. And if you see the second one, price went up, like it opened here, it went up, and then it closed down here on the second candle. And the third candle, it did tried, but it did not break the high of this candle or not the high of this candle, because this area is now resistance zone. Does it make sense? If not, because this is very important when you go with the like a day trading or anything. Does it make sense? If anybody has the question, please ask it.
Yeah, but one question, like
Yeah.
why a candle is formed? Like, I understand the wick,
Okay.
like the higher point,
Yeah.
sellers came and then the price goes down and then they form a candle. But why? What's the significance? What is the importance of a candle? Like, how do we see a wick and a candle? How it is formed?
So, okay. So whenever, say, if you want to buy price, say for an example, you want to buy the Twitter, you put your order, say for an example, $66. Somebody is buying at 66, 65. Somebody is putting an order. When you're buying, somebody is selling at this point, which is say for an example, 66.25, right? So in order to have the transactions between these to buy and the sell the stock, somebody has to sell the stock and somebody has to buy the stock.
Yeah.
Okay. At particular point, when buyers are like in the control, they want to buy at any cost, then the price will go move up. Okay. And the sellers who wants to sell, they want to sell.
One good question for day trading.
Yeah.
What is the best time to buy? Like
5
beginning of
minutes.
the
5 minutes. Oh, best time to buy after the first 15 minutes.
Okay.
And I will tell you why, and I will show you on the chart and why. Okay. So whenever somebody buy for the candle, somebody is buying here, somebody is buying here, somebody is buying here, and somebody is still buying here. That's why the price went up, right? And then everybody's buying. But now this resistance zone came, and why this resistance zone came, you need to look on your left. If you see on the left also, this area, look at this area. Price went up to the 66.45, but it came back. It didn't go and cross that price. The second high was this one. Which one? Here. This is the second high of the day in the first 15 minutes. This is the 5, 10, and 15 minutes, which is like 9:40. Yeah. So it didn't cross it, and then it fell back. And people were buying here, and that's why it took support on that area and went up. It came 1, 2, 3, and the fifth time it was able to kind of cross it and go upwards. Okay, let me simplify this one for everybody if nobody got it. Okay, so everybody understood why the candle form?
Yes.
Okay, let me, there is a chat box, is there, I think. Okay, so now once the candle is formed, it needs to go higher or the lower, or it will stand in the stay in the range bound. Okay, so what is range bound? Okay, if the price is particular, like say price is going up and down, but like say from here, let me see this one. If price is moving on like some like range, it's called range bound. If price is moving up, it's called uptrend. If the price is moving down, it's called downtrend. Everybody understood like basic concept, the way they talk, like you will see every time, okay, the price is, the index was in range bound. What is range bound? It will go up and down between the certain range. When the Dow went up or the SPY went up, that means like it was an uptrend. When it says downtrend, it like this. The price never moves like this way. Like price never moves like this. Price never comes down like this. It will always go in a like snake manner. It always goes up and down. Every time, whatever the chart you take, it always goes like this one. I'm not talking about the cryptos and other stuff, but like most of the time, 99.99% price will have, even if it's on an uptrend, it will go in as like a snake, like up and down, and then it will go up. It will never shoot up like this. If it does like this one, that means like a pump and dump. Okay. If you see here, like a longer time frame too, this one, if you see, it's better like here. Did you see? This is the day, this is the line chart. Price is uptrend. If you see, the price is uptrend. However, it's going like up, down, up, down, up, down. Always. This is the how the stock market works. This is the how the pricing works. Even if it fell, like this is probably the March, that area. Even during that March, if you see here, price didn't fall like rapidly from here to here. It came like up, then went up, and retracement and up, down. And it went up, when it went up the uptrend, it always like that one. So that's why the day trading makes the money, because price changing from up to down. Because if there is a buyer here, there will be the seller here. There is a buyer, seller, buyer, seller, and then buyer here, seller, buyer. That's how the price goes. Okay. Now I'm gonna come back to the candlestick. Everybody knows green is a bullish, red is the bearish, right? Now let me just go to the like simple candlestick. How does the candlestick form? Let me kind of make it here. This is the candle for an example. And this is like, presume this is the red. Let me just say this is green. Make it green. Okay, this is, assume this is like a green candle, because I don't want to waste the time creating the candle. Okay, this is the wick here, and this is the wick here. Okay, now this is like ideal. This is body. This is the body of the candle. This is the body of the candle. This is the high of the candle. This is the low of the candle. This is the wick. If you see the bigger wick, like say here, like this much, and I'm going to make it shorter. What does it say? Or like this is the no wick or the smaller wick. What does it say? In a simple, who is in the power?
Bullish.
Bullish.
Buyer.
Buyers are in the power. Okay. Now, if you see here, who is in the power?
Sellers. Yeah.
Sellers are in the power, right? Now, if you see here, if I remove this wick, I'm just going to put it on a side, this wick on a side, and now here, assume this is the red candle. Who is in the power? This is the red candle. Who is in the power?
Buyer.
Sellers.
Huh? Sellers.
Sellers.
Okay. Now, this is, I'm going to make it green. Okay. This is green. Okay. So I now have two candles. So this is green, right? Now, if this was bullish, and now when this candle engulfing, this is called engulfing candle, bearish engulfing. What does it mean? Is like bear are eating the bulls. Okay, because this is big one, like this is the big candle compared to this green candle, right? Does it make sense? So if you see here, let me show if I can figure it out. This other one. Okay, I couldn't see the bull bearish here, but I will show you the bearish engulfing. When you see this bull candle and when you see the big like red candle beside it, like a big, that means like now the bulls are losing control and bears are in power. Okay, let me show you on.
Was that one between 16 and 28? Okay, that's fine. Yeah.
This one.
Yeah, 16 and 23. Between 16 and 23.
This one I'm talking about, this candle, this
Okay.
this area. Okay, this is the green, this is the red. When the red is bigger than the bull, or like that means like this is engulfing. They are eating the bulls. The bears are in control now. If I go with the chart, like when okay, this is the different. I'm gonna go with the big candles if I can show you here on a date time.
Here's one in the very end.
Yeah, but this is the 5 minutes candle. So 5 minutes candles are like not gonna give you the like proper one here. If you see here, now look at this one. This is like a different pattern. This is completely different pattern. Sorry, this one. Okay. This is completely different pattern. That's why I'm not focusing on that one, but I'm trying to show you the bullish engulfing or the bearish engulfing. That will give you like better idea what I'm trying to show you. It's very difficult sometimes to find those candles.
Maybe
okay. like in a simple word, if I say like this one, this is very bullish candle, right? This one is very bullish candle, and after that, if you see here, there was a resistance here. That makes it easier here. Okay, this will be the perfect example. I'm gonna show it to you. This will make sense about the support and resistance too. So background is 0. So now see this one. Price went to a particular point, like here. One tried here, and look at this one. In order to move this range, which was like $52 range, it made a bigger, like a bullish candle. Did you see that one? And after that one, if you see, the market rallied from here, right? So if you see here, and I was talking about the range bound, if you remember, if you see this area, does it going in a particular range, like not moving much, right? If you see,
yes.
This is moving in a like particular pattern, right? So this is called a range. When you have to see this range, that means you need to wait for this breakout. Either it breaks up or breaks down. Always. Then only you see the movements. Okay. Now with this one, this is daily time frame. That's why when you are going, and let me see here. If you see this one in the range, look at this one here. How many times it did tried to cross this barrier? Like at least couple of times. It fell and it tried again, and now from this area it fell, right? Because this was like a resistance zone. This is a pattern which I'm going to tell later, but this is like a head and shoulder pattern. So if you see here, it fell, the market fell, and now it's again trying. So but this one probably your next resistance zone. If the price for this one doesn't move beyond this part, so if for an example for the BLE, if the price closes above 124 by next week, you will see 142 for sure for the BLE. That's how they predict the price. Did you get me?
Hey, can you see the new stocks that just came out, like Coinbase?
Coin
came
I
out?
will show you because coin doesn't have much, but I will we will discuss about the particular stock.
And then NVDI. So that also is very.
I will like whatever the stocks you want to go, we'll go through the stock. But what I'm trying to say is you need to see this area. This one
Yes.
will be your resistance area, like the green one, and the bottom one, this is your resistance as well as the support area.
How far? How much back you go? Logically.
Logically, like you go where the price did some movement. So let me remove this one. Now, if you see here, why this price changed here? If you see here, this was an area of interest here,
Yes.
right? So now that's why I said if you need to go to the higher time frame to the lower time frame. So this is the daily. Now let me go to weekly. Did you see why this the price reacted? Because
Yes.
here and exactly at the same point, if you go here on a monthly, look at this one, is still reacting at the particular point. See, does it make sense now? They like, how does the price react? Let me just cancel this one out. See here, the price was in range here for like how many months? 1, 2, 3, 4, almost 5 months in this range. And then it make the breakdown. So how much, if you have like got another breakdown, how much was the profit? Almost 188%. If you, that's why this one is the very important, looking into the like price
Yeah.
range. If you go to the daily now, this is the like price sometimes, and in order to break this range, look at the bullish candle, right? Look at this bullish candle, how big it has to make, and the price again came, and I'm gonna make it a little bit larger so you can, everybody can see. If you see here, this one, look at this support where it took it. It took exactly the support at the closing of the like the breakdown candle. Does it make sense to you guys? What I'm trying to show you on the chart, how to read the chart. And I never prepared the chart. Like I never prepared any chart for you. One of the charts I do like it. I have some on my screeners. This is I just picked up. I never did like homework. This is how you read the chart.
So isn't the closing will be the opening of the next candle?
Yeah, no, it not always. It's not always. So if you see here, like this particular price, this is the closing, right? This was the closing. Then the price opened here and the price closed here. Okay. And in this one, price opened here, closed here, then opened here and closed here. So it varies because of the demand and supply. Okay. Does it make sense? Because this is very basic. If you know this one, rest of the things will be very easy. Trust me, because this is how I read the chart, and this is the most of the people read the chart. When they go very deep into the chart.
So Jigar, when it breaks out, can we count on the breakout, or is it like we cannot count on it?
There are two ways you focus on the breakout. One, how big is the candle? What kind of candle is it? So for an example, if it makes this is candle and it has a long wick like this much, it has a long wick like this, then just wait for the next candle. If the next candle closes above the closing of the like this is the first candle, like for an example, this is your first candle and this is your second candle. If this breakout happens with the one candle, wait for the confirmations of the second candle. If the second candle closes above the high or the closing of the first candle, you can go long because this is the bullish signal.
Okay, and how about this the bearish?
Bearish,
Can you say that? Repeat
bearish
it
is
again.
different. So it will be like go here, and then it will have a closing, and the second one will be like this much. This is called like hammer, and this is called a shooting star or inverse hammer. This is hammer, this is inverse hammer for the red candle. Okay, don't remember the name, like, okay, you don't have to remember the name. What you need to remember, who is in the control. That's why I said who is in the control. If you remember that one, it will be very easy for you. Like
So
this
Jigar,
candle.
these
Jigar,
candles these candles you drew up, they
Yeah.
don't have the wicks, right?
You don't need a wick all the time.
Okay.
You don't need a wick. So for an example, if you see this candle, it doesn't have the wick on the bottom. It just has a tiny wick on the top. Okay. So let me see if I can show.
Jigar, can you repeat what did you say about the bullish signal before?
Okay.
About the two candles?
So any candle, X, Y, Z candle, you need to see who is in the control, right? So now let's see this one. Who is in the control?
Bears.
Bears are there in the control. However, the price went up. You know the reason why? Because if you see this candle, like on your left, this candle's left. Let me show you. Delete some extra stuff. If you see this one, like I'm gonna draw the line. This one, did it close below the previous candle? No.
No.
It did not. Now see this candle. Did it close below the previous candle? Like this one, this candle I'm talking. This candle, sorry. This candle, no. Did this candle, the red candle, close it below this one?
No.
No, because it was giving support. If you see here on your left, I'm gonna show it here. Do you see this is support area? This was the support area because the price like did kind of reacted, and this price did not fall on below this one. It was taking support.
Jigar, I have a very basic question.
Yeah.
Suppose the closing of today market is not equal. It's not equal to the opening of today. So it is because of the 15 minutes difference that has caused. What is the main reason for that? I know demand and supply is there, but how that demand and supply come when the market is closed itself, and how that prediction? Because that is very important for the
are you
short
talking
market.
about the now? Are you talking about the current time?
Yes, if I say.
So the market closes around 3 o'clock, right?
Okay.
But then there is after hours market and the pre-hour market. And
Okay,
people put the orders for the overnights, the big institutes.
Okay.
So that's why the price movement will change it.
Okay.
If there is a bad news, say for an example, crypto is falling, so Mara and Right will fall in the pre-hours and the post market.
Okay, which way?
Suddenly the crypto goes up, you will see them flying. Or sometimes the company buy back the share, say the current price is 20 and they buy it for 40. So next day in the pre-open market, the stock gonna jump into the 45, 49 because people put the orders before the market opens.
Sure, yeah.
But once it starts, once the market opens, like 9:30 when it opens, that's when the closing of one candle should be the opening of another candle, right?
No.
Immediately, because there is no fluctuation in between. There is no gap in between.
No. Here, if you see these two candles, these two, like let's say these three candles, okay, they are going up from $98. It went to the $117 in like 3 days because there are buyers here who want to buy at any price. Okay.
I think his question is intraday.
Your question is intraday, or your question is general?
He was
So
asking
intraday.
For the intraday, we have to go for the smaller time frame. Let's
Yeah.
go to the 5-minute chart frame. Let's go to the 5-minute chart frame and let's see. Okay, what's your question now?
So the closing of one candle should be the opening of the another one, right? For
Okay.
intraday.
No, it's not necessary. Why? Because say for an example, somebody put the order for about say 10,000 stock here, and somebody put the 15,000 stock here, the price gonna jump up right away. That's why you have the gap. Like these gaps are created because of the market order. Does it give the answers to your question? Like this is the perfect example for.
Also, so that is to accommodate big orders mainly.
Yes. Like for me and you, we won't even move a penny for the market.
Yeah.
We won't be able to put even cents for the market. It's the big orders which are the moving the market, and our job is to either get in here along with them and get out here before they get out.
Jigar, since you are on an intraday, I have a question.
Like I do the intraday and I do the swing. Okay, and my focus now currently, because I'm kind of more focusing into learning and doing the strategy, I do more into the Indian market. Yeah, but you can ask me questions and I will give you the answers. Hello?
Hello, can you hear me?
Yeah, I can hear you now.
Okay. For the day chart,
yeah,
how do you do the multiple buy and multiple sale of particular stock? I mean, how do you decide it? Like buying in chunks and selling in chunks?
So like if you want to buy the particular stocks,
yeah.
So that's why you need to know the moving averages. That's why you need to know the support and resistance. That's why you need to know how the previous day closed, how the previous day, what was the previous day's high, what was the previous day's low. Those are the things you need to focus when you are like doing the day trading. Day trading is very like tricky if you don't know the basics and how it works, the emotions and other part. I will come back to those one, like how you can like keep your winners and get rid of the losers. Okay, I will come to that strategy. The golden crossover is the strategy which I'm going to talk later, but my focus now is the basic is candlestick, support and resistance. Does everybody knows what is support and resistance and everything? Like anybody has the question?
I'm good, thanks, Jigar.
Yeah, if anybody has it, then I can go or move on to the different question. Anybody has any questions so far with the support and resistance? Like I will go for the support and resistance and how to draw it. But does everybody understand what will be the support, what will be the resistance? If not, then I can repeat myself again just to make sure you understand it, because it's very important.
Yeah, sure. Can I just repeat one more time? Just
Okay.
one more time.
So now let's see. I don't have a chart. Okay, I'm just gonna get rid of this chart. I don't have anything. Now I will draw two parts here. And now the price moves like in direction, right? So when I see this portion, this will be my seller. Okay. And if you see here, this will be my buyers. Okay. So buyers wants to buy the price, buy the stock at any price, and the seller want to sell at particular price range whenever they're getting profit. Okay, that's how the buy support and resistance come. So this is support, this is the resistance. Now what happened is, once the price, so here for an example with the buyers, I have say 15,000 buyers. Okay, and for the sellers I have about 10,000 sellers. Okay, so this price came one, one time went there, and now because so how many sellers are remaining? 0, because like all the sellers are done, because buyers were like 15,000, so all the sellers were bought up, so price will go up. Does it make sense? When the buyers are more, sellers are less, the price will go up.
That is GameStop kind of situation or what?
Yeah, GameStop. Yeah, GameStop kind of. When the sellers are like 1,000, now if I say buyers, okay, now okay, let me just get rid of this. Okay, now I have, say for an example, 5,000 buyers. Okay, so now when the price goes up, for an example, because there are so many sellers, the price will come back to look for the another buyers at particular area. When you have more than another like say 6,000 buyers, so now it will, the 6,000 soldiers will go up to fight against this remaining 5,000. So the extra soldiers will be like 1,000. So the price will go a little bit up, but then again there is a chance it will fall back because there are not many buyers. There is no support. Okay. Does it?
How do we find how many buyers and sellers like?
So if you go for the volume, do I have the volume chart? Yeah. So now if you see this volume, that's why you can determine, is it a, there are so many, so when you see like these big charts, like here, there are so many buyers, but there are less buyers here.
How did you get to the volume chart?
Those are the indicators I will come back to later. These are the indicators.
Okay.
Okay, this is the indicators. So now if you see here, this particular portion, I don't know the chart, right? I don't remember the chart. See this price range, right? There are not buyers. Let's see what does the chart says.
Yeah, one question.
Okay, let's see the chart. Just a minute. Look at this one, volume. The price was ranging. This one in a range, very small range. Did you see? Like
yes.
That's what I was saying. Like, because there wasn't any buyers here, the price was moving very slow. Whereas this side, if you see here, the price went up, because if you see this area, there are lots of volume, and the price went in the range like this side because the volume died out. Does it make sense now how the price moves and up and down?
Yes.
Okay, any questions so far?
Yeah, one question.
Yeah.
This volume is actually the trade which has happened, correct? So this shows buyer and seller are equal actually that point of time.
Which one?
Because this volume shows the trade has happened, correct?
Yeah, this is trade happened. Yeah.
Yeah, so that means the buyer and seller are equal at that time. There could be some more buyers, some could be more sellers which are out of the market. How do we know that?
So for that one, you need the data, level 2 data. When you see the bid and ask price, when you see the bid and ask, then you will say somebody's want to buy at the lower price and somebody asking the higher price.
But generally it shows the price, not the volume.
Like
we are finding how many volume.
Do you have the VBull? Everybody has the VBull?
What is it?
VBull application.
What is that?
VBull is an application. Excuse me. Is an application where you can see those level. When you go to the level 2 data, it will show how many is the bid and the ask. Look for the word bid and the ask. Okay, bid and the ask. So when you have the bid, that means the price will go low, and when you have the higher ask, price will go up.
Excuse me, Jigar. I have a question regarding bid and ask. You just told, right? So sometimes it's seen that the bid and ask is very close.
Yeah.
And some of the times, like when you're trading, you see there is a big gap, 10, 15, 20 cents gap between bid and ask.
Yeah.
So what is it? What does that mean? Because sometimes you see only 1 cent, like bidding is 19 cents, like the ask is 20 cents.
That's called
And
spread.
the other times, yeah.
That's called spread. So what does the spread is like? So when the buyers wants to buy at the cheaper price, they will go for the bidding. They will put the previous order, like put the order. Okay, that I want to buy at the cheaper price. So they will put the orders in the system. But the sellers doesn't want to sell on the cheaper price, so they will ask for the higher price. So the difference between these two will be the spread. So if the more the spread, more the money you're gonna lose.
Okay. Yeah. So that means it's a dangerous.
Lesser the spread you're gonna make, because say for an example, spread is like 15 cents. So for say you are buying, the current price is like say $10, and somebody you are buying for $10.10. So whenever you see your trade, you will 10 cents minus already on your trade because you bought it higher, where everybody wants to buy the cheaper. So always look for the spread.
So if the difference is closed, so that means it's less risky.
It's less. It's like your trade won't go negative right away.
Okay. Yeah.
Otherwise, in this case, like if there is a spare like trade between like 10 cents, like a 15 cents, your trade will be like negative right away.
The moment you buy it, it will show negative in your account.
Yes, right.
Yeah. Okay. Yeah.
Okay.
Okay, makes sense. Yeah.
Okay, that makes sense. So everybody kind of understood what I was trying to say, or like, is anybody has the question? Any question? No. So far, so good. Okay. So like if you see here, this one too, this is the range. And if you see the like volume died out, right? So now we understood what is candle. We will go further details, like we'll go by the different kind of candles, but this is candle we understood. Now we're gonna show what is support and resistance. I kind of basically gave you an idea what is support and resistance. Now let's draw on the chart, and then you will understand what is support and resistance. Does it, anybody has any questions or no so far? Anybody? Any question? If you can ask me any questions if you have.
I'm good, thanks.
Okay, good. Okay, now.
So Jigar, one question I am having it. So whatever you are explaining, this strategy will help us to identify whether to buy the stocks for a long term, when we have to buy. So this type of artificial intelligence is used to buy for whether we need to keep the stocks for a longer term and other things. Is my understanding right?
Yeah. So this is like for an example, if you want to buy the stock, you always want to look for this consolidation phase. Like this is called accumulation phase in their language. Like this is accumulation phase. Okay. What is the accumulation phase? Is like big buyers are buying cheaper. They're not gonna buy right away, like too many quantities, because otherwise they weren't gonna get cheap. As a retailers, we'll be like seeing this one around this price range. So we'll be like buying expensive than them. Okay, so this is, if you catch the stocks in this like range, and if you go long, you will make good money, right? But when it comes to the day trading, there are certain strategy which I'm going to discuss later, which will help you to understand how you can buy or sell the stock for the day trading. Okay, and or for the swing trading too, if you want. Does it make sense?
Yes.
Okay. Now let's draw the support and resistance. Support and resistance is like you can say, when is somebody wants to buy, it will support it, and when you want to sell, it will become resistance. However, the support will become your resistance, as well as the this one will become resistance and the support, this area. So how I'm going to show you. So for an example, price is struggling from here to here because of the resistance. Price will fall back, price will try again, and finally it will break this resistance. Okay. However, the price will come back here. So now this area, which was a resistance, now is a support to this price range, and the price will move further. Does it make sense or no?
Yes.
Yeah.
Okay, it's very easy, self-explanatory, that the price, this support area, this area, I would say like area, I won't say the resistance or the support area, it will act as a support and the resistance. If it blocks the price, is a resistance. If it supports the price, is a support area, is a buying zone, or supply or the demand zone. You will see the different names. What the supply zone means, like buyers are there. What is demand? Sellers are present. Okay, so this is supply and demand. Now let's see how we can plant those supply and demand on a longer time frame, and then we'll move to the smaller time frame. Okay, let's see. So now, if you see, when the price touches to this particular point, so for an example, like here and here and here, and when it reacts, either it goes up or the down, that is your area of interest. That is like either supply or the demand zone. Does it make sense? What is the supply and the demand? Hello?
Yes.
Okay. Anybody has a questions for the supply and demand zone? So when the price reacts at particular points, either it goes up or the down, is an area of interest, which also you can say is supply or the demand zone, depending if it's supporting, is a supply zone. If it's not supporting, if it's like stopping the price to go further, is a resistance zone. Is that clear for everybody? Okay, so now I'm gonna plot this area like here. Okay, so now, and then we'll discuss about this price, and I'm gonna show this one, this area. Okay. Okay, so now you are seeing this area. I'm gonna do the background, little this one, and okay, and so now let's focus on this area. So if you remember, I said the price gonna become support, gonna become the resistance, and resistance gonna become the support. See here, price went up, it stopped particular point, it came back, which is called retracement. It tried again and went up. Okay, now later, not now, later, the price traveled all the way. Okay, price traveled all the way like here, it came and it stopped. Then again it went, came back again, it stopped. So this is like resistance area before for this candle, now has become the supply zone for the new like up movement. Does it make sense to you guys or no?
Yes.
So Jigar, when you're saying supply and demand, it is just another word for support and resistance.
Yes, but when they like usually what people do is, let me show you how they make the support and resistance. They make like they use this horizontal line and put it here. They put the horizontal line and put it here. This horizontal line, but what you gonna do with this one? Like this candle, price did penetrate that part. Price did penetrate this portion, this portion. There was a reaction at particular point. That means there were buyers or the seller at particular point. That's why you need to draw a zone. Like what a zone? That means like where the price reacts the most. This is the one chart. You tell me any other chart you want to go, and then I will plot it on that one. Any stock. don't tell me the penny stock, just the like good stock.
Try NVIDIA. NVIDIA.
And NVIDIA, okay. NVDI, right?
NVDIA.
NVDIA. This is the one. NVDA.
Yes.
Yeah.
That's the.
Let me just, okay, there is nothing on the chart, right? Now, let's go for the first, as usual, we go for the monthly chart.
Mm-hmm.
Look at this beautiful chart. Nice pattern. This is bullish pattern. Like this is peanut. Like if it goes up, you can expect this price to go around another 50% for sure if it sustains on this area. So I'm not surprised if the NVDA goes to at least $800. This is like 280. So at least $800. If not, minimum, it should give like $50 of movement within like a month if the market sentiments are bullish. Okay, because of the pattern. Okay, if you want to go long, like if you see here, the price reacted. This is bullish candle, right? Everybody said this is bullish candle. This is not a bullish candle. This is not a bearish candle. This is bullish candle. This is bullish. Even though it's a red, it's a bullish candle. Why? Because look at this
hammer.
It's a hammer. It's a hammer. But look at the price was like 460. It went all the way like 15% up in a month. Like, you know, they managed to push the price up like about 15% in a month. And this one is like very bullish. This has some resistance above that one, but that's fine because here that was an area of concern which did the breakout. If I was like, let's see on weekly, look at this one, it gave the breakout. See, like now you have to adjust a little bit, but like if you see, if the price this on a weekly base, it gave the breakout and now it's supporting. If you see, this one is supporting. If this week, which is like next week, if gives closing above this one, this is gonna go bullish. Last month, if you see, it's kind of went up from here. Like, and I was like, see, we were right for how many months, like how many weeks? 1, 2, 3, 4, 5, 6. 6 weeks price is bullish. And like for the first 3 weeks, it was kind of bearish, but then it found the support here. So, and it found the support here. Why? Because of this reason. See here, it did give the support. Price was on a range here. Like almost this portion was on a range for about 2 months. Right? That's how you try to read the chart. It will take a time. Even I'm like learning a lot on the reading the chart, but this one is a bullish candle, right? As we said earlier, this is the
this one moves a lot every day.
Yeah, because it's bullish. I'm not surprised if it goes to the $900 in like say 2 months or 3, if the market sentiment is bullish. I'm not surprised.
Is candle the only chart to read like this, or is there any other chart to read like this?
There is a Fibonacci candle too, but this will take a lot of time. Everybody follows this candle. Why? Because like this one, like what you're gonna understand from this chart? Nothing. There is no info, right? This is the line chart, right? People go with the like hello candle, like the hollow candles, and then they go to the Renko, right? But nobody reads. Like, what are you gonna make it from this one? Nothing.
How about the area? Area is also important, or what?
Area is always important. Area is always an important. Area is area of interest. That's what you will hear a lot of time. That this is the area of interest. Why? Because that's where the price is reacting, whether it's going up or the down. This is called area of interest. Like if you see here, this is the day chart, right? And here, if you see this area, like price is reacting. One, so took the support, went up, and here, if you see here, it did support. I'm just kind of drawing the like normal line. I'm not going for a zone, but just to kind of explain. See, the price reacted here, price reacted here, gave the false breakout, and trying to give the false breakout, but is supporting because it's a higher high from the previous side. That's a different concept, which I'm going to talk later. But
Jigar, can you also plot the volume on this to see?
Do I have the volume here? No, but then I have to go volume here.
To see how the buyers and the sellers, the volume.
See here, this is the day chart, and if you see here, look at the buyers. Like, look at the volume, pretty good. And like, see the way I was saying, like the range. Look at this area, from here to this area, less volume than the particular day. Even here, less volume, and the price went in the range. Right? This is what like a range. It's not like moving much. It didn't reacted much. Now it's kind of reacting more. It's kind of slowing down. That's why the price came down, because there are not many buyers. Right? So volume, you can pay attention, but usually I pay attention to this, like how the candles are formed. Right? How the candles are formed. Like this is the bearish, but this is like a more of a piercing candle. That means on Monday, price at least gonna reach 622. At least. If the market sentiments are, of course, let's say this is closing was 611. You can see about 620 level, 619, 620 level for the NVIDIA on Monday because of this closing. Right? If the market sentiments are good, like, you never know. Nobody predict the market, but this is how they see. Okay, any questions so far? Hello?
Yeah, how did you predict this one? You said?
So now, I'm focusing on this candle. Like it will take a time for
Just
you.
the last part here.
Yeah, just here, if you see here, these candles was like a bearish candle, right? It took the support from the previous previous support area. Then it got a piercing candle. So that means like a 50%. So this indicates that if the market is bullish, it will go to the next resistance, because you are going for the day trading, right? So when you go for the day trading, you need to see the resistance here. There was a resistance here, and there was a resistance probably here. Let's go for the 15 minutes time frame. Price must have reacted on that area. See, price couldn't sustain that part. If you see here, the first candle couldn't sustain, the 15-minute candle couldn't sustain, and then it fell from 610 to 593 because it was a bully, like a bearish candle, and it couldn't pass the resistance. It tried. It was in like a zone, and it gave breakout on a downside. And if you see this one for the down, price is still not going up. It did went on a sideways because this is a like strong resistance area. Why? On your left, if you see here of this area, and if you go further down, this is the area. Right? I never shown this, like I never studied this chart, but if you see here, if I am going for a day trading, I will always plant this area. And if you remember, I planted that area from the day chart, not from the 15 minutes chart. Right? So these are the like area of interest. If you see, like I'm gonna narrow it down a little bit. So if you just, let's show how the support and resistance works. Let's see. Now here, So the price went up and then came down, took the support with this area, and then it went up, kind of sideways, and it gave breakout. See here, it gave a breakout, right? So from 609 to the 598, and then it again tried to go up. I'm 100% sure there will be some support zone here. Let's go on a left and see. There should be some support zone here. Here is the support zone. This area. This area is support zone there. Right?
This is intraday.
This is intraday for 15 minutes. I just I did the just charting in front of you guys, right? So see here. Beautiful, right? It took the pause here, right? It took the pause here, like here. And then once it broke the support, like once it broke down, this become your area of interest for the support zone. And what did it do? It did provide the support earlier, like on that day, and yesterday, like today, it broke, and then again it gave a good breakout. Once it gave breakout from 601, it went to 608 in like how many minutes? This is what area? Okay, this is exchange. Okay, so it went from like 9:30, it went up to here. I'm pretty much sure there is some boo-boo on my chart because of the timing, but this is like a day per day. This is how the price reacted. This is also a double bottom pattern. It's like a W pattern when you see the W.
Yes.
Right, it's a common pattern in the M pattern. So this is double bottom if you see here, and then the price reacted because it didn't give the closing below that the support. So this is how the support and resistance work. It came, gave the support, now it become resistance. It fell, now it again become the resistance. Once it moves here, the next resistance will be like this one. This will be your next resistance, but this will be like 628 will come, provided it pass this area, which is this one. Once it crosses this above 616, you will 624 will be like 630 will be very easy for the NVDA. Very easy. Once it crosses the 617, because there is no resistance. It was just free fall. There wasn't price stopping. Anything wasn't stopping. And it will stop here because of this resistance. Once it's crossed 632, you will see 642 and 648. Right? But again, here also like 623 is kind of resistance. If you extend this one, this is support area. Yeah, so 617, then the 623, 630, 640, 643, and 648.
So are you saying that if you note down this observations,
yeah,
you can use them tomorrow?
Yes, you can, because this is for the day trading. Okay.
So previous day's chart is good for the next day. Is that
couple of sessions is good for the day trading. Couple of sessions, like if you see the price reacted where.
So there's a W. So what happens when you see a W? W is common pattern? Or?
W is a common pattern, but it's when you see the W, and once it gives the breakdown here, you will see the like how much this is like a 4%. So that will be your target. So let me show you like pretty quickly W pattern, okay? Just to kind of give you an idea how the pattern. So this is like price came, took the support, it went up, took the support again, and went it up. So this is the neckline. So this will be the like neckline. Once it crossed this one, it might come, the price might come here to test it, and then it will shoot up. Your target will be the length of this one, which is like 8% in this case, for an example. So if you're like looking for the swing trading, you put like 8% and say 8% is here. Yeah. And then you get out at 766, you get into 710 or 729, you get out 766, and below this one, like this area, will be your stop loss. Does it make sense, or did I go too quick?
No. So can we? This is good. This is good. But how do you use this information? Like, if with a new like if you open, like if you look at Amazon doesn't move that much every day. But try Avago, AVGO, Broadcom, yeah.
Okay, now, so if you see here, like on that one, okay, sorry.
See, it has a W here at the bottom, and then it's
so yeah, because when you see this pattern, for an example here, I'm gonna like draw the line. So this is the W pattern, right? You're talking,
yes.
And as I said, look, did it come back to see the like test the again?
Yes.
It came retraced, right? So if you are a day trader, just kind of give what you do for a day trading. First, make the low. Let me just kind of cut down the volume here. So draw the line. First thing, you draw the line. Okay, let me see which line I'm gonna draw. Okay, I'm just gonna remove this trend line. I'm gonna put the volume down. Okay, now make it easier for the day trading. This is the low of the day. This is the high of the day, right?
449 and 461.
Yeah,
okay.
I did draw the like lines.
Yes.
This is the day of the day. And what is the area of like concern, like supply zone and the demand zone? I would say this one, right? Because price reacted.
Yes.
So this is your day area. So now next day my area will be like this. Now, if you see in first 15 minutes, if you see the bullish candle, this is bullish candle. I'm gonna go for the 5 minutes later. It coming close to the previous day high. This is the previous day high, right? If it closes close to the area, and if you see the second candle, which is like a bullish, let me go to the smaller time frame for the day trading. Now here, okay, if the price like this is the 5 minutes, the price came closed above the previous day high, 5-minute candle. Okay.
Yes.
Okay, so then if you want to go long, you can go long somewhere here, like this price range, because there wasn't any. You could have put the order or go long here. What will be your stop loss? Your stop loss will be like just below this candle if you're doing day trading. And you take your target. I'm gonna pretty quickly gonna go through the target. How? I'm gonna plant CPR. The first, this is the resistance where you can get your target.
So
your first target will be like this one, and the second will be this one. So in this case, you should have made $4, which is like 1%, which is good for the day trading.
What CPR?
Oh, yeah, I'm gonna come on that one. That's why I said I don't want to confuse. But this is how you can plant your resistance and the support zone. But those are just for the like more of a keep in mind purpose. You need to still know how you to draw support and resistance.
Do you use the same charts for options?
For option is tricky. Option is tricky. Why? The option has a time decay, and that kills the most of the premium.
Okay.
Right.
But have you looked at long calls, like 2 years, 3 years?
Yeah. So like you can go for the long calls, but the premium will be very high on those long calls.
So sometimes you find it like, not a big premium. So if you pay that premium,
yeah,
suppose you want like in the money call, like $20, you're
in the money call will be very expensive, specifically the good stocks. Okay, so yeah, if you find the cheaper in the money options, like close to the money, you can always go for it.
like Avago, you can see long-term call options are cheap, like 2 years.
I don't have, but
That's
I can.
okay. That's okay. Yeah.
I'm not here, but yeah, but for like once we know the support and resistance, then we can move on to the different, because this is very basic. If you
Yes.
know these things, you will like help yourself not to go in the trade early.
Jigar, one question.
Yeah.
Your decision on selling is also based on support and resistance?
Yes. The rule of the thumb you need to remember is never buy when there is a resistance, and you always try to buy close to the support.
Okay.
So right, so if you remember when we were like doing the like analysis for this one, and this one was like our previous day high, right? Why didn't I told you to buy here? I should have told you, no, buy here. No, reason is you never know. This is resistance because of the previous day high. It can come back from here and fall. That's why you need to wait until it breaks the resistance, because you are doing day trading. You need to watch out for the previous resistance.
So the day trading, are you saying what interval should we use? And 2 candles? 5 minutes.
For me,
so 5 minutes, 2 candles, 2 green candles?
No.
Then?
Not 5 minutes, 2 green candles. This is Nvidia. Let me show you any other stock where I can show you which you are not following.
Can you check any Canadian stock like LSPD, Lightspeed?
LSPD. Lightspeed. Okay, let's see Lightspeed. Okay, now look at this Lightspeed. Okay, now let's go for an hourly candle. Just to go for an hourly, just to do the quick support and like days high and the days low. This is days low. This is days high. Right? Now go for the 15 minutes. Now go for like 5 minutes. Okay. Now, if you, okay, this one is not showing me the date. Okay, let me see the exchange. Okay. So if you see, I cannot see the timing here. Let me see if I can. Today is 23rd. Okay, 15, 22, 20. Okay, so this is the day change. I'm not, because it's not showing properly, that's why. Oh, wow, it's kind of different. It's not showing properly the day. That's why I kind of limited. So now this is on a range. If you see it reacted here only, like days high. Did you see here? This was the previous day high, and it all reacted on that area only. It just stayed close to that area. And this one, if you see the area of interest, like this was a resistance, this was a support, like this was a resistance, it came up, took the support, broke it down, and the price reacted on this one. If you would have wanted to go, you could have gone here at 10:45. If you see, this one was the first candle, but you don't go long on the second candle because it didn't give the signal. It wasn't bullish, it didn't break the high. So you have to wait for the retracement. Now, if you see this candle, I'm just gonna go long here. If you see this candle, it did break the high of the day's high, because this was like 9:30 and this is 11 o'clock. So at 11 o'clock, it break the day's high. till now, this was the day's high, like here. I'm talking about this time range, okay? This was the day's high. And when it broke the day's high, which is here, and then the price went up from how many percentage here?
So
2%.
should you get in when day's high is broken?
Yes, you can go long at the day's high is broken. But at the time, there are certain criteria you need to look. Let me show you pretty easy. Now let's see how the CPR works here. Let's check it out, CPR. Okay, look at the CPR. Resistance, cross it, second resistance. Let me show you here. Do you see the red line? Let me gonna make it like a little bit darker. Okay, I'm gonna make it a little bit darker. Okay, this one is.
What is CPR though?
Yeah, I'm gonna talk about the CPR once the time comes, because this is gonna help you a lot. Trust me. Now see here. This is like weekly CPR. Okay, so this is my weekly. Oh, sorry, that's the day's high. Sorry, yeah, this is previous day high. That's why. So now if you see here, does the price reacted? What did I say? When the price break the like a day's high, you can go long, but it reacted close to the day's high of the previous day, like this range, because that was the previous day high. Right? So if you have this one, at least you know when you need to get out and when you can get in this trade, along with the other like moving averages. Okay, does it make sense? This is just kind of, I will teach about the CPR, what is CPR and how you can use it. This is one of the best tools you can use it for your day trading.
So that area of interest you drew, that is the exit point right now?
Yeah,
this
like when I drew the CPR, like there is no CPR. This is the plain chart. Before I do the CPR, what did I do was I put the day's high, like previous day's high, and this is previous day's low. If the price goes up the day's high, like in the initial first hour, okay, then you can go long. If it doesn't break it, you don't go. Why did we go here long? There are two reasons. One, it was taking a support from here, like the previous area of interest, which is 84.69. Second, it break the day's high at this candle, like this is the candle, and your target will be the day's high. Or
you can actually put a sell order at day's high. Buy this.
Day's high. Don't put at the day's high, put a little bit below that the day's high. So if the day's high was like 87.04, put down 86.95. And your stop loss, like here, if you go long, okay, sorry. If you go long, this is short position, so no, that won't work. If you go long here, and your stop loss was here, and your target was here, so it was a 1-to-2 ratio, which is perfect. 1-to-2, yeah, probably 1-to-2, close to the 1.8, 1.7. Yeah, you can actually go a little bit higher. 1-to-2 ratio, which is perfect to get into the trade, because you went up here. Even if you go slower, like this candle, and if you put the stop loss below here, which is still a 1.9 ratio.
Hey, what is that? When you move your mouse on that, it gives you risk reward and
yeah, this is the risk reward.
It's part of the tool.
Yeah, it's a part of the tool. It's in the trading view.
That's nice. So you put a stop loss and you select. You didn't select the second point.
No, I just selected I selected when I went in, what will be my stop loss where I want to keep, and what will be my target. And it will give you the risk reward, which is 1.9.
Okay, like a calculator. Okay.
It's like a calculator, yeah. But you don't have to figure out where you're gonna put the stop. Like you can select where will be your stop loss, where you're gonna get out, and where you're gonna get exit.
But how do you use this tomorrow?
Because when you are getting in the stall, like suppose nothing happened here, it was here, like up to here, like say for an example, you wanted to get in, plot into the chart and say this is my day high, so I'm gonna take the target, I'm gonna keep my stop loss here, and you keep it like this and hide it, so you know where you wanna get out.
I think we'll need to practice this, like make this a habit, because
TradingView is the superb software.
No, but because you're showing us, it's easy. But to
Yeah.
start a new chart, I don't know. We'll be able to do it
Get
again.
that tool in here.
Yeah, where?
Where did you click to get that one?
So it will be here. This side.
Okay.
Like here, like this one, your will be here. Everything what you need will be on your left side. Okay. Whatever you need is on your left. I just start them, so that's why I have it here. I can get it pretty quickly if I need to. Because when you are like doing the charting and everything, you will learn. I never knew about the TradingView or anything about say 4-5 months ago. I played about it and I can do the stuff which I want.
So do you use this when trading intraday?
You can use it. Yeah, you can. I use it.
And this graph moves, or it's
this will move. This is like a 15 minutes graph. You go to the 5 minutes graph and see, if you would want to get out, I would get it here, right here. This would be my perfect entry. If I was trading this stock, this area will be my perfect entry because it broke the day's high and it kind of give the like bullish candle. You go long. If you are like conservative, you go long on this candle and get out of here for sure.
So tomorrow, so you see the green candle.
So
then you have to wait for another green candle. And then you have to wait for it to break 87.20.
Yeah. So now, like say for an example, before you jump into the any trade, you need to do the back testing. What does the back testing means? You need to see your method works or not on a particular stock. So for an example, there is no timeline here, so I'm gonna go to the Neo because I cannot see the. Now here I can see the time because this is like a 1 day.
Yes.
That's why I choose this one, right? I'm gonna move my charts, whatever I did. I don't know what I did, but I did something here. So now I wanna say for an example, do the day trading on Neo for an example, right?
Yeah, this one is already ready to break.
Which one? It will be very hard for it. It will be very hard, trust me. Neo is, let me show you horizontal line because I did some like watching it. And I'm not sure whether I told them like before that it will go to the 35 and fall back. And what the heck, CPR is coming here. No, I don't need it. So I already like earlier in the other groups I told like, it will go to this like 35 level and it did go. Now the big resistance is for this one is like this area. This is like a bigger area. So if it has to fall, it will fall here. Otherwise, you will see $45 for Neo in like next week. If the price doesn't fall, it will go to the 45 level because it has so much support here. See, the price reacted here. So much support. One time didn't fall, second time didn't fall.
What is that picture on the left you have?
This is the Fibonacci, which we're gonna talk later.
Okay.
Right, which we'll talk later about that one, Fibonacci. That also gives the like directions. And if you see this chart, it had a like perfect like top triple top pattern If you see here, like this one, it makes it easier to
I
see.
think you should give us a test.
1, 2,
to,
3. You need to go, and this is like a breakdown, and then price fell because
See, Jigar, what do you see the NEO's target for 1 to 2 years?
NEO is a good one for a long term, but then you need to, when you're going for the long term, don't look at the stock, because once it moves down, you're gonna get panic for sure. So that's why if you wanna go long, don't look at the stock anymore. Let it go. Let it do its work. Buy the dip. Don't buy it because you want to buy. You want to buy at the dip, like say here. It gave you 3 chances to buy, and then it gives
Yeah,
the
I missed
perfect.
the one at 31. I missed it badly.
Yeah, so like this one, look at this one. It give the complete breakdown, like complete breakout. I bet you will get it up. This is what, for $41. You will get
Yeah.
it for $38 for sure.
Okay.
Because
when it goes down, you can add some chunks, right?
Yeah, but don't add everything at one point. You need to still wait.
Yeah, average out. Right?
Yeah, average it out, right? Because sometimes, like, see, people bought NEO at $63, and this was the perfect way for, like, perfect range for the big players to get out from the trade, because this is in the range. If you see, this is in the range. Once it break that range, it fell like a crazy, which was like unbelievable, right? And if you see here, this is the chart, right? Very easy. If you don't know how to draw the chart, go through the line, mark it out, your resistance and area. Like, for an example, if I want to do the chart here, like trading line, I did this one, go to the, like, candlestick and kind of adjust it a little bit. So now this is my chart. This is how you, now this is called trend line. Okay, that means like price reacted on, go to the trend line again, reacted, came back, and boom. And when it broke the trend line, look at the volume. That means you can go long next day. It was giving the signal here right away because it was doji. You could have gone here or here. If you're conservative, you could have gone long here because it was a big bullish candle. And even this one today is a bullish candle. So next week you will see the 43 level for the NEO.
Yeah,
And
next
if
week looks like a all bullish week because of earnings and all, right?
Yeah, and if it falls, you will see that this level, which is 38 level. And then if it has to go up, it will go from 38, and you will see the 45 in no time. But if it has to fall, it will fall up to the 34. That's why it's the probabilities, right? You take your chances based on the probabilities. Right? Okay. And I was talking about the like a bearish engulfing. This one. This is bearish engulfing. This is the bull. This is the bearish. It ate up the bull and the price fall. Did you get it? What I was trying to say?
Yeah.
This is the bearish engulfing, pure bearish engulfing. The body of the green candle is inside the body of the bearish candle. Okay. So far, so question, like any questions, because I'm not sure, because I was kind of scattered all over. Anybody has any questions so far? Where
I have a question.
Yeah.
So when you put a sell order or a buy order, right? I have heard that they don't hit at the price that you set it at. So for example, let's say if you want to get out of a particular sell, a particular price, if they don't hit it, what happens? Like, or stop loss, for example, if you put a stop loss order and does it always hit or doesn't hit?
It will sometimes hits. Like sometimes what happens, like a big hit, like somebody if put the stop loss here, look at this big wick. Like look at this big wick. It will eat your stop loss for sure. right?
So for that example right now, let's say the lowest is 32. So if I had put a 34 stop loss, would it actually get sold, or would it actually go to 32 without getting sold at 34?
It will go at 34, or like plus or minus 5 cents or 10 cents, depending on the particular stock, because sometimes there are so many sellers, so they cannot fill up your point, like fill up your orders at particular sell points. That's why it goes lower to the next available buyers.
And the same goes for when you want to buy. Let's say if you want to buy it. Okay, got it.
That's goes to the buyers. That's same goes to the buyers.
Okay, thanks.
Any questions so far? Anybody, any question so far? I'm not able to see the chat box. Anybody, any questions so far, or is it like too complicated?
Are you planning to take any session on patterns and that you just
Yeah, so we'll take the, like next Friday we'll go about the patterns and everything. Now today what we conducted was support and resistance, right? Trend line. Okay, let me go we conducted the demand and the supply zone. Well, let's go the trend line and the horizontal line. Okay.
Jigar, I think you were talking something about back testing, and then we
Okay.
stopped.
Okay, back testing. Let me see the back testing for the Neo. Okay, so that will be go to the, it will be about your strategy, how you wanna plan. Say now, okay, I'm gonna trade, forget about this days, I want to trade on this day. Okay, this is my day's high, this is my day's low. Okay, now if I want to do the trading on that day, this is the 15 minutes candle. Now I'm gonna go, this is day high, I'm gonna, okay, day high, 5 minutes candle. Now if you see here, this was the day's low and days, like days lows and days high. This is days high, days low for today, for the Neo, which was like $40 and $39, like this range. So if you want to go long, you go long here with this candle. Okay, does it make sense? Because you break the day's high with the volume. There should be volume here, 100%. Look at the volume, right? It broke with like broke the day's high with the volume. So you go long and get out with the 1 or 2, like at least 0.80 to 1%. That should be your range to get out on a day trade. So it gave you like 1.38%.
So when you're saying days high, it is this particular, the same day that you're trading on, not the previous day.
Yeah.
And you wait for some time to let that high settle, or it is immediately when market
it
opens?
It depending on the candle which you're getting. Say if you see here, there was a buying here too, but then you would have panicked out and sold out here, because if you have gone here, your stop loss, you will put it here or somewhere. If you put it here, that's fine, but sometimes it hits. So you want to get the confirmation for the day's high, because you never know, the price might go up and fall here. Okay, so let's go with the same strategy. Let's go with the same.
And this is a 5-minute chart, right?
This is the 5-minute chart. I'm not going to use the more like a longer chart, but just a 5-minute chart. Okay, now let's say this is the second day. So for this day, we have to go on this day. Okay, now this is the day's low. Sorry, this is one of the strategy you can use. Day's low, this is the day's high, like a previous day high. This is on 21st April, and this is for the 22nd April. Okay, now let's see if the strategy works. Okay, now I'm gonna draw the yellow line for the day's high. Like first 15 minutes, don't trade. Okay, try to avoid trading in the first 15 minutes. Okay, so now first 15 minutes, so that 5, 10, 15. Okay, what's your day low, day's high? 15 minutes day's high, this one, and After that one, you didn't get because you want to go long. You don't get because you want to. And this is days low, okay? Because it's in the range. Now, if you have gone long, say this candle, because it broke this and like it broke it, you go long because it broke the high with the candle, but the strategy will fail because your stop loss will hit here, okay? But you go again next time and you get 8.8 to 1%, and you don't get out before you get 0.8 or 0.1. That you need to remember. I will get it out with the 0.8. That's the minimum, and your stop loss will be here. Let's say risk ratio. Let me see risk ratio. How much is the risk ratio? If you go long here, sorry, this is short, this is long here, this is your day low, this is, you want to get out at least 1:2 is your target, should be. Risk ratio is like 2. Okay, so now this way, if you see here, you went here, which is, say for an example, 39.70, because this was the confirmation. If you, I'm just gonna remove extra stuff, this was your confirmation. This one, say your stop loss was hit, okay? You went long along here, so your stop loss will be here, which is candle. Put it down here. Stop loss was here. Now you need to 1:2 ratio, okay? That's the minimum you need to get. So 1:2, which is here. So if you are in the trade, your target will be this much minimum, and your stop loss will be this much. You don't get out until either one of them is hit. Okay, does it make sense?
And if it gets hit, then you should not be greedy, right?
Yeah,
like
so
you should just sell it.
Yeah, so that's why I say, like, when you put, say, this ratio, which is almost 2.25, so this is actually, this is like 2% risk ratio, is because you are losing 20 cents, 22 cents, and you are getting 44 cents, because this is day trading. Again, remember, you are doing day trading, so you are getting 1% minimum, and how much you are losing? 55%. So for example, if you have the 100 share, if you buy the 100 stock, you will lose $22, but if you will get $44.
So when you reach that point of $44,
yeah,
make that decision. Do you look at more candles, or you just decide that this is my exit?
So now what you can do now, instead of this stop loss, you put your stop loss, like let it run. Like if you want to go higher, let this stop loss come here, because this is bullish candle, right? Here was a bullish candle, so you want to put your stop loss trail here, like, let me see, it comes, manually trail your stop loss here, and then when it gives move this candle, you trail your stop loss close to the candle. So now, say for an example, you are getting out here, say your stop loss got hit here, so let's see, put down this one, say your stop loss was hit, okay, and you went from, I'm gonna remove this one, and you went long here, which is, I'm saying here. Now distance between these two candle, I'm gonna remove the extra candles, the extra lines. So you supposed to go from here and you enter this point, which is 39.70, and because of the stop loss was hit, you got out from here. Let's see how much you would have made, because you trail your stop loss. This is 41 cents, right? and you would have been like greedy, and you would have been like go stop out with this candle, right? That's why like when you put the like this like long or short positions like here, you know where you want to get out, right? You are getting like 44 cents. That's your minimum. Once you get 44 cents, trail your stop loss here, like, you know, up to you. If you want to like take a big move, you can take a stop loss, and I will show you how you can take a big move. Okay, let me, when you are here, I'm gonna show you pretty quick. We're gonna cover later, but let me show you quick. Yeah, here. This is kind of part of a golden crossover, which you're gonna learn later. But 4918, okay, I'm gonna remove everything else from the chart. Okay, volume 2. Now this is 4918 moving average, which we'll talk later. You will be in the trade until this time comes. You manually go and get out at this point because it closed at this candle. Why? Because this is like 4, 19 and 18 moving average. This is called a golden crossover. This is the golden crossover. The price reacted. See, this is the golden crossover. Like this is kind of golden cross, and this is pure golden crossover, pure, and it will give minimum 3% or 4%, 2% here minimum, but you don't get out until here at least. So you get at least 2%, 3%. This is the part of the golden cross which we'll talk later, because I don't want to get you confused. We are just focusing on one strategy. That's what we will focus. That's how you get out. 1:2 ratio. Always get in for the day's high. Let's go for the another one. In order to get this strategy, we have to move on this day. Let's see. What was the day's high? Here. What was the day's low? Here. Okay. Now, if you see here, you didn't get the trade until here with the strategy, but you get at the later half, and at least you get how much? Because you are getting here 2% minimum. Does it make sense to you, or like, am I going too fast? Hello?
I think now it's making more sense, like in terms of once you thought about the support resistance and the candles, so it's making more sense now.
Yeah, it's making more sense. And if you see here, like, you know, like this is the trend line again, you know, this is the trend. The price is going up. It's taking the support. So if you want to go earlier, okay, you took the support and then you go long, and this will be your stop loss, like here, somewhere here. And you ride the trend. You don't get out here because it didn't break this trend line. And then you go again, it here. You can, if you have gotten out, you would have gotten out here, for an example. So even if that distance is almost 1.38%, that's a 50 cents, right? And your stop loss was just like here, not even like like 0.5%. That's a bigger risk reward. Oh, sorry, this is like 3 minutes. This is 5 minutes candle. Yeah, this is 5 minutes candle.
So in day trading, you also have to account for the commissions, right? Both ways, like buy commission and sell commission.
Yeah. So that's why, like, yeah, I'm trying to focus more on the options. That's why I'm trying to focus on. The reason being is like, you'll be paying like about $1 commission, right? And when you have this one movement, like say about $1 movement, that will be like $100 on your profit on your option side. And how much you're gonna lose? About $2-3 if you're like with the IBKR, right? So because option is completely totally different thing, right? Because you're getting particular premium for the 100 stocks. So when the stock moves like $1 or $2 with this sudden movement like this one, the premium gonna go shoot up like $2 or $3. So you will be making like, if you are investing $100, you'll be getting out with the $200 or $300. Right? Does it make
So
sense?
you use IBKR for your trading?
Yeah, IBKR is good for the options. It's cheaper, or even for the trading.
And for regular?
Yeah, regular also, like you can use the Whale Simple if you are just doing the swing trade, because there is no commission. Right? Anybody had any questions like Hemant, Merrill, Royson, Paramveer, Sefali? Anybody? Any other questions? Anybody has it? If you can unmute yourself and kind of ask the questions, then I know that you understood it.
Can you suggest any good stocks for to play for like next 6 months, like weekly, monthly, or like something? If you can suggest, not blaming you.
No. Like depending on what stock you wanna play, because like Neo is a good play, Plug is a good play, Twitter, Snap, those are the good stock to play. Don't go.
Yeah, I'm not talking about daily. I'm talking about like monthly or
Yeah, you can go
quarterly.
go for the Walmart. You can play, which is good for the next 6 months or probably the longer term. One stock which I was saying, MXOC. I like that stock because one of the guys, MOXCS.
Can you able to in WhatsApp?
Yeah, let me see this one.
Your suggestion, like then we can use your things. And do you know any good software to play auto trade? Like
I don't have any auto trade pay. This one did close 615. Okay, this one. If you wanna keep this eye on this one, MOXC. This is pretty good stock because it gives bullish on the weekly. Now the next target is 731, and then after $10 is you will get the $10, $9 for sure. This one. This one you will see the $10 in like 2 weeks or 3 weeks. Yeah, if you want to go for the swing trade, MOXC.
So what's swing trading?
Yeah, like swing trade is like you buy today and sell it after 1 week or 2 weeks or 3 weeks. That's a swing trade. Day trade is like you get in today and get out today, like at the same day, is a day trading. And the swing trade will last for like 2 weeks to the 3 weeks or a month. And the long-term investor like will be like 4 or 5 years or 6 years or however long you want to go. Okay, but this will be like good for the swing trade because one of like person in the group found it, and I told him that if it closes below $6 on a weekly chart, this will be very bullish, and it did give like very bullish candle. If you see here, very bullish candle. You might see some retracement, and if you want to go long, get out around 520 on a weekly chart, not on a daily chart. Daily chart.
Yeah, but if you see the daily candle, this chart is showing a lot of gaps. Like it is going up from last 5-6 days, I think.
Okay.
But there are some gaps. So how
gaps is okay. Gaps is okay.
Gaps are fine.
Yeah, you're looking on a 1 hour or 2 hour. Daily trading, there is no
daily candle.
Daily there is no candle. There is no gap. Because if you see here, like let me show you the Fibonacci just for fun. Okay. Here.
See, there are gaps.
Which one? This is like normal. This is normal gap. This is not a gap. I'll show you what the gap looks like. Trust me, and you will see how does it get filled up. if you see here, this is trend line. This is taking support. So it took the like 618. It took the support here as well. The trading was like supposed to be here. Yeah, it took the perfect 618 support, like, you know, retracement to the 78 level. It went up. So there is a high possibilities this gonna give good result. If you see here, I'm gonna remove. This is the bearish candle, like a engulfing, bullish, like bearish engulfing. See here, it did it, right? And then it fall back, and then it went up. And this is bullish candle on a daily time frame. It up the like previous candle. So this stock gonna be bullish. The next target will be like 684 if you wanna go for a day trading. 684, 740, and then it can go to $10. Like $9.30, I think. That was the low. What was the yeah $9.25 should be the next stop. 640, 710, and 940. This should be the stop for this stock if you wanna go long. But again, go with the stop loss. Okay, make sure you have the stop loss in case if anything goes wrong against your trade. So you are not a bag holder for this stock.
So what could be the stop loss on this?
So there are on a daily basis, if you are seeing, okay, let me show 480. So like if you are having a 480, let's say, because I don't want to give like too close because sometimes the week comes up. Okay, I'm gonna like very conservative 425. So now 425 you are going short. Now if you're buying here, say for an example here, 420 is your stop loss. So now you need minimum target of $10.30. I said 940 should be there. Okay, so this will give you like 1.5 reward ratio. So you are putting $2. Let me slow it down a little bit. Okay, yeah, this is the like a risk reward 1.76. So if you are getting like price range about $6.15, your stop loss will be around 460 and you get out around 948. So this will be like 1.2 ratio. You are looking
and any
around
good
like,
EV stock, because that's the nowadays biggest talks going on, right? EV stocks or battery charging.
EV stock.
There's a lot of
right.
if you show a lot of vibration is right now in the car market, right?
Yeah, Link, I said this one gonna go fall after $37. That was my prediction.
A lot of Chinese maker.
This is the Chinese, yeah. So like this is the trend line. So this one, sorry, this is the trend line for this stock. I do remember I drawing this one. So, and this is like a good resistance area, I would say. So now if this stocks goes 39.45 for an example, this level, if it crosses this level, it will be bullish. It will be bullish until $47. Why? Because it broke the trend line. Now it's trying to retrace it. So in order to this stock to sustain up this one, it has to cross this trend line. Otherwise from here, it will fall down. If you remember, I'm not sure, like I talked about the Brookfield, right? BEPC. I did draw that chart. And if you see, like if it has to fall, it has to go closing below this one. And if you see here, it didn't give the closing and then it could the retracement, like it fall and it bounced back from this resistance area because it was a big support as well. And I think I did told about like 2 days ago about this particular stock. I do remember about it because if you see here, it has a big head and shoulder pattern, like very, very good pattern. This is like a shoulder and like this is a head. So, and this is very good, very bearish, very bearish pattern, right? So if it falls, it has to give closing below these things. Below.
So what is the buying point for this one?
This was a buying point. Let me see here. Let me say the ask moving average, right? For the buying, we always ask the moving average, what this says. Now, this is, let me highlight some of the moving average. I need 1500 and 200. So I don't need this, and this. I need this 2, 3, yeah. Okay. So if this stock goes up, if you want to short it, short at $46. Wait for this level. If it comes to the 46 level, it's gonna fall back again. If it gives a good closing, like big bullish candle, like large bullish candle, like this, then go long, because it will go up for sure, right? Because this is the trend line as well here, like this is the good trend line. So this will be the good area. This like this is like 50 and 100 moving average, EMA, which is very good. If you see here, like let me show, this is the day trading, right? Day chart. Look at this one. This is like, which one? This is 50, I think. Yeah, this is 50. Like the purple is 50 and the blue is like 100. So 50 reacted here, went up, reacted here, and once it broke the 50 EMA with the volume here, look at this one. It fell almost 23%, right? If you consider 100 as a good point, it fell 10%, and after the 100 also it fell almost another 15%. So that's why moving average is very important. And here, if you see, this is the junction. This is making a crossover. 100 is going up, 50 is going down. That means the price for BEPC, once it goes to this range, it will fall back. It's very hard for it to go up. And I do have the 20 here somewhere. I don't have it 20. Yeah, let me see, put it this one as a 20. Yeah, see here as well, like the black one which you are seeing now is a 20 moving average, 20 EMA. So already price is kind of cutting down and falling. This is like, if keep an eye on this BEPC, trust me, this area, don't do anything until it comes to the like $46, $47. Don't do anything. If it doesn't give closing above the $47, boom, short it. It will give, like buy put and you will make money. Buy put for at least 1 month with the depart, and you will get at least 42 and $39 level. So you will make good money on that one if it gives the way I'm thinking. Okay. Any questions so far? Does it make sense to everybody, or am I going like bouncing to the one point to the other point?
So Jigar, what makes you select what is the average numbers you need to go? Like you chose 6,
Okay.
you chose 4, you chose 5.
Okay, so there are different, let me say EMA. Let me just kind of briefly go about what is EMA. Okay, we talked about the EMA. So different numbers for the EMA we usually look is 20, 50, 200. Those are the good numbers for the EMA or MA or DMA, anything. When it comes to moving average, these are the good numbers, right? When it comes to the like 20, like say 20 moving average. Now let me show you. So when I say 20 moving average, so this is the range, the yellow one saying is the range of the 20 days, because this is the daily time frame. When I say it's called the 4 hours, so it will 20 times 4.8, 20 times 4 hours. So that will be about 80 hours range. This is the 80 hours range. That's how, when you are looking for the timeline, you need to count. So usually when you look for the stocks, go for the daily and see how the average are moving. So this is 20 is cutting 50, 20 is cutting 100. So this stock is in a downtrend already. Okay, like now, if at one point, like after 2-3 days, this will be the area of interest, right? If you want to take the pictures, take it. This will be the area of interest where 50 gonna go down if the price is moving up, and then 20 gonna cut here. So if the 20, like 20 moving average, takes a U-turn and goes up, and the 50 moves down, this means the price gonna go up. So this is the very good area. If you wanna go long or the short, this you are on like particular time frame, like within like 1 week, you will get the price reactions either up or the down, and it will be like massive. Whatever the way it goes, it will be good because it's a junctions for the 3 average, 20, 50 and 100. If you're looking for the longer time frame, like a price range 200 EMA, it's good range to look whether it's a day time or like a day trading or the swing trading. Let me go you for a 15 minutes. Okay, and let's see how it reacts. And see here, the 20 average, the price went up. It took the support at the 20 EMA. Because this is like not a good stock, we cannot see all the timing. Let's see the NEO. Look at this one. Does it took the support at the 200 EMA? And this is 20, this is 50, sorry, not the 200, this is 20. The black, did you see it took the support from the 50?
So earlier you were looking for the EMAs for BEPC?
This is EMA. This is all EMA.
Okay, and for BEPC as well, right? All were EMAs.
So for the BEPC, let's see BEPC. So this is BEPC, right? And this is, okay, this is 15 minutes. Let's say it's 50 minutes, right? And let's see the colors. What are the colors? So I have black MS6, which is here, is 200. Let me make it easier here. I'm gonna make 20, 50, and 200. Okay, now I'm gonna close this off. Okay, so the purple is 20, green is 50, and the maroon is 100 or 200. Okay, look at the chart. I'm gonna remove everything else except the, okay, which one is the other one? I got it. I don't need this one. Okay, so whenever you see the price close to the particular moving average, it will be the smaller moving average. So this will be the 20, the green will be the 50, and the maroon will be the 100. Okay, always price. And if you see here, when it crossed, like very easy to understand here, this area, you are seeing there is some reaction, right? Once you see them separating pretty quick, like pretty long, you can short it because this is in the downtrend, specifically for the day trade. Or if you want to buy puts, you can buy the put, right? So suppose you bought if you went short, you would have got about 8%. Okay, does it make sense? How the EMA helps you to determine whether you want to go long or the short? Does it make sense or no?
Yes.
Okay, now if you see here, because this is 200 EMA. Now see here, this price range, right? Price is reacting here, but once you see there is a separation here, this is 15 minutes chart. Okay, if I go 1 hour, it will give like proper, see, you will see the proper idea, like, okay, yeah, price is reacting 1 hour, because when you are doing day trading, you have to look for the 1 hour chart to determine what you're going to do for the next day. So now if when I see, like, say for an example, you saw, okay, the price is reacting, it's under the 200 EMA, so I will keep this on my like a selling side. If the market is downtrend, I will sell this stock, I won't buy this stock. Does it make sense now?
So you said market is downtrend, not the stock.
No. Okay, so when the market is downtrend, most of the stock will go down. Okay, when the market is like, this is bearish stock, for an example, this is bearish. Okay, this you determine as a bearish stock. Now the market is going up, so this won't fall like faster. It will fall and then come back and go up, and it won't go higher, but it will go on the range bound when the market is up. But when market is down, this will fall quicker. Okay, so for an example, let's see, this is BEPC, right? This date is 19 April. Let's see what was the change for the SPX at the time. Okay, SPY. So 19 April, let's see the chart for the 19 April for the here. So 20th and this is 19th. So this box, this is 16, 17, 19 is from there to here. See, the market was in a downtrend. Okay, market was in downtrend clearly, right? So market fell, like the SPY fell almost 70.70%. Okay, now let's say BEPC, how much it fell. It fell almost 5%. Right, now let's see if it's in the uptrend. Like if it's in uptrend, let's see the SPY was up today, right? And SPY was from here. Let's see, from here it made 1.35%, and this one only made 2%. Did you see? Because it's still under 200 EMA. It's not a bullish stock, right? So when it fell with the market, it fell like 5%. But when the market was like about 1% up, it just only went 2%. The market was like only 1% down, but it fell 5%. Why? Because the EMA was a big resistance. People were selling at this point of time after seeing this conjunction. Like, does it make sense to you now or no? Oh shoot, there is waiting room. There are two people.
Yeah.
Okay. Like, if you have any question, just put in the chat box and then I will kind of try to give answer. I'm trying to change your perspective about the day trading here, right? how to look for the stocks and whether you want to go long or the short. Right? One strategy is, now you already saw that, okay, I'm not gonna go long, I'm gonna go short on this stock because it's already under 200 EMA. Right? Now, the second thing which I told you, it can take the support from this EMA, 20, 50, and 100, 200. So now let's go for the lower time frame, 15 minutes. Right? Even you see here, it didn't cross it. Right? But when it was below 20 EMA, like its entire time until here. Right? And if you were like buying put, you should have made at least $300 on the put. Right? Because it went like, it fell around 7% in a day, like 2 days.
So under 20 EMAs, we should not long any position. Right?
No, until it crosses like 20 EMA. For that one, I will show you like a 15 minutes chart.
Yeah, if it's under 20 EMA, then we should.
Yeah. So if you are long, do not buy if it's under 20. Like if you are bullish in the market, then don't buy below 20 if it's under below 20. When it went above 20, look at this one here on the 15 minutes chart. Okay, it went up 1% because it took the support here too. It did try to close, it opened below the 20 EMA, but it took the support from that. It didn't give the closing below 20 EMA. Whereas yesterday, when the price broke, like around 1 o'clock, it came, after broke it down, within like next an hour, it fell like 1.5%. Just by this one, see here. And when it was up here, see, it went up 1%, 1.5%, because it was above 20 EMA. It was above 50 EMA, right? In 50-minute chart. Here, price went up, but it didn't close below 20 EMA. And the next day, the price fell. Price fell until the price gave the closing above the 20 EMA. It did not, like once it gave the closing below about 20 EMA, then it went up. Like see here, it gave the closing, like closing above the 20 EMA, 9 o'clock, it broke the resistance and then price went up. But then there would be some resistance, which is here already. Like if here, see here, there was a resistance. See why the price fell from here? Because there was a resistance here already. That's why the price fell. And once it fell after the 20 EMA, it fell above another 1%. So that's why the resistance is very important. This was the support before. Remember, this was the support. But once the price fell, it became the resistance for the next day. It was a support on the 19th. On the 22nd, it was resistance. Does it make sense? Or you want to see any other chart?
Yeah, so basically for options trading, we should focus on 20 EMA and 15-minute chart candle.
So you can look for the 5 minutes too, right?
Sorry?
5 minutes chart. For the 5 minutes,
okay.
I will show you the golden cross strategy and you will like it. Trust me, you will know it. How to be still in a trend for the options. Even here, if you see here, even like looking at this one, see, it gives so much time. Like this is a 20 EMA. It falls, didn't cross it, and it fall again because the 50. More like bigger the time frame, less the noise. Smaller the time frame, more the noise.
Yeah, that's right.
Right? So if you see here, like if I'm saying 1 hour time frame here, I don't have a like noise. See, I don't even have to think. If I shorted here, like anyone here, even say here because I want to wait for the 200. You short it here first day in the morning because it's already 200 EMA, like 200 below 200 EMA. You short it here and just wait. Don't do anything until it comes to hit your target, which is because if you're shorting, you'll be like shorting here for an example. This will be your stop loss, and to ratio will be like this is here. Even this is two, which are just think this is like 1:2 ratio. But if you have known this like EMA with a longer time frame, you just hold until like this place, like I'm saying here, because you're gonna get out one. So you would have got 5% out of it. And what you would have done, you just have like trail your stop loss. This will be your stop loss, right? Rather than keeping your stop loss here, you bring it down to here. So now, at least if in any case, you'll be making 2% or 3% for sure, even if they take you out from the stop loss. Does it make sense, or like is it kind of too much at the same time? Because like we started like 7 o'clock is almost 3 hours, right?
Yeah.
Because like I can like talk so much, like if I have to talk like a day, I can talk about like whole day about these things, like how this works, because I've been seeing like at least 3 to 4 hours of videos and the books and learning the strategies and trying to sharpen my skills. I'm just focusing on sharpening my skills. I don't want to make money, that's okay. I just want to see how the price reacts. The one which I'm talking is all about price action. It's nothing about like indicators. Like, did I use the RSI? Did I use the MACD? Nothing. This is the pure price action. How does the price react? That's what you need to focus, because this average, moving average and everything, it's all depends on this price, nothing else.
So can you expect start of BlackBerry? It went recently very high and then came down. It's almost done now.
Okay, BlackBerry. Yeah.
BlackBerry.to.
Let's see. Okay, Tio, you want to see?
Maybe.
Okay.
Yeah.
Now look at this one. I'm looking at 1 hour chart. Okay, 1 hour chart. And now easily, like if I'm seeing this chart, am I going to trade this BlackBerry? No, until it comes to the 1160 and give me direction whether it wants to go up or the down. I'm not gonna buy it. As simple as that. Let's go on the daily time frame. Let's see on the daily time frame. See, now if you want to do the day trading, if you want to do investment, this is the best time because it took the support at 200 EMA. And if you are getting in for the long, like say about a year, put a stop loss around 10, 12. Let me say like a little bit conservative to kind of doesn't get you out. Put a stop loss about like $10, $9.98, and ride it until it goes. If you are like a long-term investor, because it took the support from the 200 EMA. If you see here, it took the support here as well and then went up, fall back, again is going up because it took the support on the next day. This is bullish candle. This is a bullish engulfing candle. And this is also bullish. So now next day, if you are like a short term, like a day trading, 1140 will be your target for the next week. And your short stop loss will be like 1069. And your target will be like this moving average, which is 50 moving average. I'm believing, yeah, this is 50, 20 moving average, I think. Purple is a 20, yeah. 20 moving average, this is 1140. If that crosses, your next target will be $12. That's how for the next week. That's how you plan for the next wick for the day trading. If you're planning for the long, you don't get out until now. Once the price moves up, you trail your stop loss like 2 candles below. So now the stop loss is like $9. After a couple of days, move your stop loss to the $10.70. Once the price move to the 1140, move the stop loss a little bit higher, and that's how you trail your stop loss.
Do you think it moves up to 20 in another 4 or 5 months?
This hike was because of the GME. This is because of the GME. So now if you see the resistance, right, it has to, let me say weekly. Let's go for the bigger time frame, very big time frame, right? So we can see now. Look at this one, like perfectly taking support. This is on a consolidation phase on a weekly basis, right? You never know how big the consolidation phase goes last. On a weekly basis, if it goes to the $12 with a bullish candle like this one, you can go long, and you will see the $15 within 1 or 2 months. Because if you see here, this is like a big resistance area here too, right? On a weekly basis, this is like a bigger time frame. If you see here, this came for the GME, but it came with a like big push, and then it went up, and all this price fell because of the GME people, like a WSB people. Now is making here, and trend line for this one is like this. If you want to go long, don't go long before $12. Buy a little bit expensive, don't buy at $11, buy $12, because you're gonna get the confirmation. If you are conservative, like if you are like a risk trader, you can buy now and put the stop loss below 980 and let it ride. If you're even for the long-term investment, 980 and done. So you're not gonna lose much money. You're just gonna lose like $1 for a stock, which is okay, because this can give you like $15 in 2 months or 3 months. So your risk reward is like 1:4 or 1:5.
Hey, Jigar, I have one question. So
Yeah.
I can address it in the next session.
Yeah.
This most of the time today was devoted towards day trading.
Yeah.
So like people like me who are like long-term, say 3 to 5 years or beyond. So can you have something quick? So what I do is generally I look at my P ratio and the EPS.
So like this one, that's what I was like saying. If you're long term or the short term,
yeah.
If I'm long term, I will see this where it's taking the support, right?
Yeah.
So this is the 200 EMA, this is a 550 EMA. Now 200 EMA we're gonna go down, 50 EMA gonna go up. That means the stock gonna be in the uptrend, but this is be on a consolidation phase for a while. Once, if you are buying now, just for a BlackBerry, buy the BlackBerry now, put the stop loss like 980 on the conservative side. If you're like too conservative, 920, because this is the low of the last week, so not gonna get kicked out with a big week. 920, let it ride, right? And it might go up to the 1246 and might fall. If it cross this 12 like trend line, it's gonna go up.
Yeah, but then I should not take into consideration the P ratio or the EPS.
Nothing.
You just go based on this.
Go based on this one. Like if you see like any stock, like say for an example, plug, like just for an example, for a long-term investor, right? Let me just say day trading, and just very quickly, like look at this one. I'm not putting any average, moving average now, right? See here, people are gathering. This is like a consolidation, right? The price is kind of moving in the same range. This is where you want to get in. And when the price kind of comes in consolidation again, this is called a distribution phase. This is called accumulation phase. That means like big buyers are buying on a lower price, and this is like an uptrend. This is like a distributions to the like retailers, because that's where and people never get out because they think, oh, it's gonna go up, right? And this is downtrend. Like if you see, this is the downtrend, and this is will be like again accumulation phase, or it can go further down. Like I am seeing like plug for my prediction, and somebody was saying about the gap. I'm just gonna show it, so I just gonna show it pretty quickly. This is called a gap. This is a big gap, right? And all the gaps are filled, regardless like how many months, but like if you see, all the gaps have been filled later. It was like January, and now in the March it was filled up, right? So if when you see the gap, it will act as a big resistance and the support. Okay, does it make sense?
Yeah, Jigar, what is VWAP?
Okay, that's another indicator which we can go along pretty quickly. I'm just gonna go and plant it on those one. Do I have space? Yeah, I have space for that one. To VWAP. Okay. This one changed a little bit, so I have to change the setting for that one. I don't need a upper band, lower band, fill anything. This is save as a default.
And this is the paid software trade?
This is no, this is I'm using the free one. I'm using the free one. Okay, so if you are a day trader, this is for the day trading only. Do not go short above when the price is above VWAP. Do not buy when the price is below VWAP. As simple as that. Okay, so pretty quick here. Specifically for a 1 hour, it will give like proper result. Let me see. 15 minutes, let's see, for a day trading. Please see here. Price is above the VWAP and it went up. So it's a trending day. It will give a good result. On the sideways days, like here, go short. But again, there are like a couple of rules you need to remember if you're using the VWAP. But this will be like a good indications, like whether you want to go long or the short. This is the nothing but volume weighted average price. So that this is like a volume plus your price for the particular average. They do it, and like here, if you see this range, look at this one. It gives a pretty good results. 12%. Right? Okay, what is this one? Okay. So we can use this one. We will talk about this one. We can.
I'm tired. I'm talking. Did you take water breaks?
So, any more question? Hello.
No, how are you? You're recording this? How should we get the our session?
Sorry, how
you're recording this session? How do you want to share it?
Yeah, I will share it in the link because it will take a while for us to kind of get into the session, because last time when I had it takes a little bit longer time to upload in the drive, like a Google Drive, and then to share it will take like 1 or 2 days, because it will has to record, like upload and then record the link. But do you have anybody recorded the session?
No, Jigar, because it needed a permission from you.
I don't know how did I get the permission, but like.
But some advanced topic you will be covering in the next session, like golden crossover.
Yeah, so golden crossover I will cover because that will take a little bit longer time. And look at this one. We started like at 7 o'clock. It's almost 10 o'clock. 3 hours.
Yeah.
It takes a longer time, because the thing is like to understand the basic takes long, like very, very deep time. It's not like easy to understand. And I just touched back with the candlestick. I never went with the like a bigger, like big into the candlesticks, right? But even I'm not sure, like, is everybody got it, understand what I'm trying to say, or I need to like lower down my pace, because I can talk like for a day for these things, just for like
Maybe in the next session you can do the quick recap.
Quick recap, like what you can do. First thing, like for as a homework, what you guys do, just go and go to the trading view. Now go to this like indicator and strategy, which is FX here, and download the EMA. Just download EMA, just simple. Wherever you get the EMA, get it and plot it on your chart. Doesn't matter what kind of EMA use. Use the EMA 20, 50, 100 or 200. Use it. This one, okay? From the Dr. Sweets. Use that one. Okay? And plant it on your chart. I have the different EMA. I use the EMA and the MA, but you just plant it on a chart and see how does the chart looks like. I'm just gonna take off. And now by this way, I'm gonna remove this one. Okay. And this trend line also. See, by this way I can say, okay, if I want to go long or the short. See, it was a perfect opportunity today in the morning. Perfect opportunities in the morning to go long with in the plug. See here, the price went and kind of touched to the 20 EMA, and then it went up because it took the support. Price went up, fall back, and then went up because it took the support. And that's on a 15-minute chart. Let me see how does it looks like the 15-minute, 5-minute chart. Even in the 5 minutes, you can see it took the support from the 50 EMA and went up, because the smaller the time frame, this gonna change. 20 and 50 gonna change, right? So that's why I need, if you go longer time, like bigger time frame, it gives a groove. And this is the kind of crossover. Anytime you see this kind of crossover, like a small EMA, which is like a 20, and this is like a 50. So when it's the 20 crosses from the below, it's a bullish sign. If it crosses from the top, is a bearish sign. Just remember that things. Whenever the smaller time, like smaller EMA crosses the other EMA, like the bigger EMA, you will take the trade accordingly. If it's crossed from the below, you go long. If it crosses from the top, you go short. Right? Just for the back testing, just pretty quick, because you're gonna end the session. It's kind of too long. It's like 11 o'clock in Toronto. So like here, see here, 20 EMA, like a 20 EMA crosses the 50 EMA, go long. 20 EMA crosses 50 EMA, go short. If you're a day trader, this will be your kind of indication. 15-minute chart. If I go 1 minute chart, 1 hour chart, it will be like more perfect. See here, this is below 200 EMA, that is bearish. Now here is crossing, like this is a 20 EMA is trying to cross the 50 EMA. No, just write your position, and until it gives the signal, you don't get out. Just be in the trade. Do not worry about like a smaller time frame. Smaller the time frame, like a 15 minutes, more the noise. If you are a swing trader, use the like a 1 hour. If you are like a day trader, use the 5 minutes and 15 minutes. Do not use 1 minute. For the pump and dump stock, I don't recommend. For pump and dump, for a 1 minute you can go, but for the like quality stock, you go for 5 or 15 minutes chart. Even if I go 5 minutes, look at this one. This is a perfect opportunities. See here, it crosses here, and it goes up. There was a resistance here. It took some pause, came back again, tested, and went up, right? So you need to wait for until here, like, this position, like, and again, this was like our first trade when we say like it crossed the day's high. See, is high, is going high, 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 and it took the resistance here a little bit on this side because there was a highs for the previous day. So boom, you go up, that will be your target, and once it come back again, go, that will be like, you can ride the trade until it's on the 200 EMA, and the next day it fall from the 200 EMA and the stock is downstairs. You know what I mean? Like the see about the how the 200, like you can make best use of like EMA. See how you can make like 2A when you are taking a trade, how 200 EMA or the 20 EMA or the 50 EMA works, and then you will be able to kind of see, okay, there's a pattern I can follow, or this is the pattern I can follow. Look at the chart, look at the like candles, like this one. If you see this candle and if you're going long, then it's very hard, right? Because this is the bearish candle, right? And it gave like almost 2% because this was a bearish candle, right? So see and check it out. If you have questions, you can ask in the group and I will try to answer them.
Sure.
Anybody has a question, because like it's almost like a 3 hours.
Okay, just a question. You said the BlackBerry, it's maybe in another month it will be like 15. But when I check BlackBerry's what do you call the earnings date is on June 22nd to June 28th. So is it going to make any difference?
Yeah, so when it comes to the event like that one, the price like tend to change the behavior. Like it will not follow the proper stop loss and resistance, those kind of thing, because it reacting to the news.
Is BlackBerry really the good example? Because wasn't it a meme stock?
Yeah, it was. That's what I'm saying. Like it was a meme stock like during this time period. Like here,
Sure.
this is the like meme stock, right? This was the meme stock.
Yeah.
Then when you have the news or the meme stock, no resistance, no support. This says like if the stock is in a bullish, it won't respect any resistance at all. It will just make higher and higher. If the stock in bearish, no support will stop it to come down. Like look at the like plug for an example, right? Just for a fun, if you see here, look at this plug. It was like $63 on 11 February, and from within like 1 month, not even like 20 days, it fell 50%. Did it support like give any like respect to the any support? No. Once the stock is bullish or bearish, there won't be any resistance, there won't be any support, right? But what we are doing is we are trying that's why we have this range, like the moving average. Moving average is nothing but the calculations from the last 20 days. So for an example, how does they do it? Let me just kind of pretty quickly. I'm just gonna be wrap it up the session like 5-10 minutes. Okay. So because I want to just pretty quickly go for the moving average. How does they calculate? I'm gonna show it on the Excel. So I'm gonna say 1, 2, 3. Okay, and so this is 17. I'm gonna say 20, right? I'm gonna keep it up to 20. Now the price is say like 15 for 15.50, 16.80, 16.80, like 58, 60.60, 19, 20, and I'm gonna just just to randomly put the number. Okay, so this is the, I'm talking about the 20 moving average. Okay, what the heck. Okay, I'm gonna talk about the 20 moving average, 35. Okay, so how does they do the average? So they do the total, which is here, which is 561, and they divide this total by number 20. So this is equals to 560 divided by 20. So for the last 20 days, we can say the average was $25 for the particular stock, even though it went from 50 to 35, but the average was 25 rupees, $25. Does it make sense, the moving average?
Yeah.
Okay, so this is like a 20 days moving, and this is the price. They divide, they equal the price and divide it by the 20. If it's like 50 days, it will divide by the 50. If I want to do this one for like say 50 days, so the price for the 50-day moving average is 10. If it divide by 200, it will come for the 100 moving average, and vice versa. This is MA. For the EMA, what they do is they give the preference to this price, the weightage to this price more than this one and then this one. So like they will give weightage for the 35 more, and the 15 will be the least preference when it comes to the calculations. Okay, so that's why they say exponentials. So what does the exponential means is like it gives the preference to the near price. So they will give the preference to the say last 5 price in average, then this first 5 price. That's how they count the exponential average. Does it make sense? So when you compare, let me show you in the chart pretty quickly. I'm gonna two averages. One will be the exponential and one will be the moving average. Okay, MA2. So now if you see here, the red is a moving average and the purple is the exponential moving average. Okay, they both are 20. They both are the 20 moving average. Okay, so if you see here, the purple will be close to the price. Purple will be close to the price because this gives the preference to the like this price, the last 20, and the preference will be given to the nearest one. Whereas this moving average, the red one, will give the 1 to 20 regardless of what was the price. That's how they are sometimes. It's a different. They both are the 20 EMA and the 20 EMA, but you will see them are different, little bit different, because the calculation they do is a different. Okay, let's see if there is a 50. There's a 50 here. MA3 is 50, EMA2 is 50. So this is, look at the 50. You will see the big difference. There's yellow. You won't be able to see it here, but I'm going to put yellow as red. Okay. So now see the difference. This is like 50 EMA is close to the price. Once the price was going up, it was going closer. And once the price fall, it came closer too. So this is like a more reactive than the 50 MA. This is the simple moving average. And this is the exponential moving average.
All right.
Right. Yep. So that's how the price different. Like, but who is stronger? 20 EMA is stronger, but now people are using EMA. 20 EMA is stronger, but people are using EMA because it gives them more like up-to-date data, because it gives the preference to the last price rather than the like previous prices. Okay. Does it make sense? Everybody understood it?
These prices are the average price or closing price of
This is the average price. This is the average price. When it says like a 50 EMA, that means the 50 days price, because
average price of the day.
this is for the day. If it's go for an hour, this is for the last 50 hours.
Okay.
This is for the last 15 hours.
Okay. Yeah.
Right? And trust me, like this is very vast subject, very vast, and we as a like a retailer, we only know few drops of this ocean. That's what I feel like, always feel like, oh, every time when I see the videos, something new, I learn every time. Okay, so that's it, guys. I know you have been like so patiently waiting. If you need any help, just ping it in the message and we'll try to help you out. And anybody, there was somebody who wants to do the trading view, let me know. I can explain you now. And everybody who wants to are like, can go and leave the for the session. There won't be any more like educations or anything.
Sure.
And please give me feedback if you like session or if you don't understand the session. Give me your honest feedback so I can improve myself, because I will love to have the constructive feedback from you guys. So please give it to me whenever you get a chance.
Sure, Jigar. Thanks.
Okay, thanks.
Jigar, the
Thanks,
next session is when?
Next Friday.
Next Friday. Same time, 8 o'clock?
Yeah, we'll keep the same.
Okay, thanks. And it was a good session. Thank you very much, Jigar.
Thanks.
Bye. Good night.
Good night.
Thank you.
Bye. Yeah.
Thank you.
Thanks. Anybody wants to like learn like a trading view, they can be in the group and I can help you.
Sure. Thank you, Jigar. I'll let you know.
Yeah.
Thanks, Jigar.
Thanks. Bye.
Bye.
Anybody have any questions here? Who is here?
So as a new user, like if you show like how we can we start to be put our stuffs and start to analyze.
Okay. So if you want to analyze the stock, first of all, decide what stocks you want to go, right? So this is like, you can keep your stocks here, like on a side. You can kind of, keep them on a chart and always go. Like I say, for an example, this is Billy, right? For an example, if I go with this one, start with this one, right? Okay, this is weekly, that is a moving up, is a trending stock. Okay, now let's go to the day trade. Let me get out all those, like my whatever, edit. I don't need this EMA as well as of now. Okay, so this is 50 EMA. So now if you see, this is a 50 EMA is trending above, that means is uptrend. Okay, when it's below 50 EMA, you're gonna go short. As simple as that. With the 50 EMA, I'm gonna get the 220 EMA as well as the 200 EMA. So now, if you are like a swing trader, you just wait for the price fall below the 20 EMA to short or buy the put, and you wait to price to go up the 20 and 50 EMA to go long. Simple, like if you, that's in a simple way. Does it make sense or no?
And how to set up this corner, like 200, 100? How you do that?
So you go to this indicator, go to the public library, and you search EMA, say EMA, and you will see all those EMA, and say pick up one which you find like it's a try and error, but like if you say I want to go this one, okay, I
Which one?
planted here 20, 50, 100, 200. Okay, so let me just see.
Okay.
So go to the setting always, so you can see the like a color. You can change this color, like whatever the colors you want, and put it. So this is like 20, 50, 100, and 200. Okay, so now when you see the chart, because those two, like red and the blue green, look the same. So let me change one to the green.
So this 20, 50, and 100 is the day, right?
Yeah, because it's a day time frame, right?
Okay.
This is on a day. So now if you see here, this is 200 EMA, this is 100, this is 50, and this is 20. Now I'm gonna make the chart larger, and if you see, this was a 20, so you need to decide, okay, 20, I'm gonna go short. So it fails, next day you go short, and your target will be the 50 EMA for a day. Next day it again fell below the 50 day, you go, your target will be the next EMA. Here your target will be like 200 EMA, but it failed here, right? It hit your stop loss. That's how it is. Like, you're not always gonna get the winners, you're gonna get losers too. So if you see here, this is 50 EMA, you go short, like, because it didn't close. Next day price fell, right? And here, if you see here, it took the support here, right, on the 20 EMA. Now it's taking support from the 50 EMA. It's a stronger bullish. So now if you want to trade bully, like a bully for a day trading, 120 will be there on next week for sure, right? This will be like 120 for sure for the next week if you are like a day trader or the swinger, right? Because this is the support area, and even if you see, if you bring it down here, this was a big resistance area. Like it went up, went up, kind of reacted here, reacted here. It kind of tried to cross that area, now it's crossing up that area. So there are chances that it's gonna go up, and 135, like, oh yeah, 122 and then 135 should be the next year target, right? So
okay, so we have to decide our bottom and top target, right?
yes,
loss
so what you do is you look at the resistance, like whatever the support you took, like here. So wherever, like, to find the support is very kind of easy. Go to the day trade, like a line chart, look the draw. Okay, does it, like, so price reacted here and price came to close here, right? And then went up, and then once it broke it, it came here. Now put it on to this candle and see, there wasn't much needed for me to do, because it's almost kind of giving me the good sense of what will be the resistance next time. So the next resistance will be like 124 for this one. And again, let me go line chart, make it easier. This was a top, this was a top here, and this was a top here too. Let me just see this top. The price reacted here, price took the support here. So now after the 124, the next target will be like 135, and after that the target will be, this will be like, if the price price goes up 157, this gonna stock go bullish, right? So you decide according to the, like, the moving averages, you decide according to the, like, a support and resistance, and just take your trade and like a guess. This is all guess, right? I'm not sure that it's gonna go up to the 157, but if the market is bullish, if they hit this target, like 124 will be the first, 135 will be the second, and 157. Before 157, it might take a pause at 144, because this area is also a big concern. Like, it took the support here, this is like a resistance, so this could be like another stoppage. So more you go deeper. If you're a long-term investor, you look for the bigger time frame. If you're a short-term investor, you look for the like smaller time frame.
Correct. And can you suggest, like, I saw sometime advertise a lot of things in, like, Facebook here or there. They have some software, they just show you, okay, buy, sell, indicator.
Okay. So
the pay, it may be the paid one. I'm not sure. Like, I never tried, but I saw a lot of
this is like a trend. Wait. Super trend. Okay. Super trend. So this gives the signals to you. I'm gonna remove this one, and this gives the signals when you can buy, when you cannot buy. If you go to the smaller time frame on a day trading, you buy the call, buy it until it goes, and the smaller time frame it kind of give like a false signal suit sometimes. This is for a more of a swinger, like a swing trader. And the 5 minutes,
Which look pretty. It is. So okay.
like here it shows the like a shell, here it shows buy, you know, smaller the time frame, more the noise.
Correct.
Right.
Yeah.
So,
Some ready, like some ready apps, they show you, okay, buy, sell, no.
yeah, this is
Something.
like a, this is the indicator for the buy and the sell.
Okay. Yeah, this one looks more better.
Yeah.
Okay.
Like this is for an hour time frame. If you are like buying, go for the like 1 hour time frame. If you, it's better to do the swing trading if you are like just depending on those trend, like those signals. But does it give the false signal sometimes? Yes, it does. But like see here, it fell and it didn't like say anything like, okay, get out. No, because that's how this works, because these are like their how it comes, like this is their particular method how they find out. This is ATR and this high low 2. So
Got it. Okay. Let's try this week. We can play around with it, and we will
yeah,
give you
just
the next
play
week
around with
input.
it, and if you have any questions or concerns, just ask. Anybody has any questions? Abhi, Meryl, Minidhi, Paramveer, Rahul S. Anybody has any questions?
Not for now, Jigar. I think there's a lot to digest. So
I know it's like I talked about like say 1.5 hours, but it's like went like 3.5 hours, and I barely finished anything.
no, but it was great because I mean, the way you got in, got out, was pretty amazing. So
Yeah.
but it's a lot.
Lots to
For
digest.
me, it is a lot. Yeah. So
Is for anybody is to digest. Like this, what I'm giving you out is like at least for my like last 1 year effort. I'm trying to like digest in like 3 hours and just give
yeah,
you out. And that just I'm talking about the how the trade works. And didn't go anything further. It's just like basic, very basic, and there is very more to learn. And again, I'm learning a lot stuff. So once after a year, like I started like about a year ago, and I'm like a little better. I'm not a good trader, but I'm getting learning every day to make myself a better trader. But when I see somebody doesn't even know like when the candle tick and how does it forms and everything, you will lose the money 100%, because
correct.
there are so many big players out in the market who will eat you alive.
Exactly. Yeah.
Right. So if you don't know all those stuff, there are high chances of you losing money every time. So once
Exactly. Or rather, you're just going in blind, which is pointless.
yes, yeah, this is like a going into the casino.
Exactly.
Right? If I like when I buy this one from the like say by these signals, I'm playing on a casino based on the signals, right? But if I know why I'm taking a trade, and then if you go it with the convictions, then there are better chance of the outcome on a positive side.
No, exactly.
Right. And that's the whole purpose, right? Okay, when you go in, look it when you can get out, because people get in and they forget to get out. That's why there's a 1.2% ratio and the trailing stop loss and other stuff. So much things to digest, so many things to digest.
It's really it was really great. I mean, honestly, although I haven't really asked you a question, like I said, I was just trying to digest it and
Yeah.
not like I'm gonna do some back trading first thing, right?
Yes, yeah. Go and do the back trading. Like just go focus on the EMA. Just focus on the look for the candles, and you will be amazed that how this candle works. Like just simply like looking at this, like for an example, this candle will give you an idea. Okay, there is a buying like selling pressure.
Correct.
Almost
Yeah.
the signal is saying blue, go keep in long, because this is like longer trade. But this says
This is an indicator. Yeah.
go short. And look at this one, like how much you have made with like 5% on the next day. Is it like swing trading? And the boom, this is my like go long. This is bullish. Go long. At least get out with the like 3%, and it gives 2% on the same day. This is
exactly.
This is like this is whole bearish. Look at this bearish, right? And this is bearish too. And it fell. When it fell, sometimes you lose. Sometimes it hits your stop loss. Nothing you can do about it, right? Stop loss is part and parcel of the trading.
It's as important, yeah. Exactly.
Yeah, it's as important as your targets.
As your targets, exactly.
Right. So, but what people will do? People will short it here, and assume that it's gonna go, like go down. No, look at this one. It's following a trend. This is trend line for a longer time frame. Look at perfectly timed, and if you see like extend further.
Yeah, it's actually sitting on the trend line.
So it sit on the trend line. It broke the trend line, and as I said, it does the retracement. It does the retracement. It touches one more time to try to come out from this water. Boom! It fell. And if you see here, look at this timeline, like this one. Here, it went up, tested again, and look at this one. It price went up again. Then another timeline. Look at this timeline. Fall, and it took a massive force to break it. And see, it fall, tested again, boom, again.
But once it broke, it went clear. Yeah.
Yeah, right. Say here, because it's a 1 hour, right? If I change it to the 15 minutes, look at this 15 minutes. How does it look like?
Oh, yeah.
Right. Just based on the like this trend, you will be able to do some trading, right? Just for
exactly. Yeah. There are a lot of opportunities in there.
So look at this one, 15 minutes chart. Like here, you draw the trend line. It break with the massive, right? But it did try to go and touch this trend line. It didn't broke it. So if you are like short, you don't just go short because you shorted, because you didn't get any signal, any candle below this candle to get the confirmation. Exactly. You didn't get the confirmation yet. So
and most people would have reacted and gone short over there.
Yeah, and you go short not then the same day, but the other day. See, it broke the record, like it broke it with a massive. Then you go short. Even here you go short, but your time, like your stop loss will be like, this is your resistance here. This is your resistance because it reacted here on the shorter time frame.
How does one do a short? Like we know how to buy, but how does one?
Like you need a margin and you need a permission from the particular broker to go short.
And Wealthsimple won't offer that.
No, Wealthsimple doesn't offer those. IBKR does probably offer it, but you need a margin for that. Costed does offer, but there is a fees always associated with the short. But rather than going short, you buy the put. Okay.
Okay.
And then you don't need a margin.
Also you're saying put options.
Yeah, buy the put options. Yeah.
I see. Okay.
Okay, perfect. Yeah. This is good. Jigar, next week I just realized I have my vaccine shot in the evening.
Okay.
So I may not be able to attend the class, but I will go through the video.
Yeah, sure.
I'm sure you will record it next time.
Yeah, we'll sure record it. Yeah, I'm 100% sure it's recording.
And I'll definitely, after going through the video, come back to you with questions.
Yeah, sure, no problem. Yeah, sure, no problem. Yeah, right. That's my purpose. Like I'm trying to, because I have suffered a lot. Like I didn't know anything about it, and I had to go through so many things just to find out the particular like the way how it works. I'm still working on my psychology. I'm very bad on my psychology, and once I know my psychology, I bet you I can make a good money out of it. But psychology is the biggest factor. Once you know the patterns, psychology is the one thing you need to work on. Yeah, that's too much. Anyways, guys,
thank you so much
for attending, and we'll see you next Friday.
Sure. Thank you, Jagar.
Thanks.
Thanks, Jagar.
Thanks.
Bye.